nuclear power. So is how Meta gets to say, yeah, we really are trying to stay within our carbon targets.
And of course, you want to use wind, right? Because
the poor birds.
The birds. Will Wade, thank you very much for that. We'll look forward to your story on, I guess, a speculation on the financial details, looking at, Microsoft paying like $17 billion for like 10 gigawatt hours. You kind of make comparisons, and we'll do that. I want to check on markets right now because despite the idea that the jobs number isn't going to allow the Fed necessarily to cut rates or push them in that direction further, we do have futures higher here. And we did see the two-year yield spike as soon as those numbers came out. So it does look like the market is kind of leaning in that direction.
Yeah, but the two-year yield move has subsided. I still should point out, though, on work WIRP on the terminal, only a 5% odd that will get a cut. So the market basically saying it's not happening in January.
In January.
Yes, in January, to be clear. After that, it goes to 30%, and then basically some cuts of price.
And down to
their authority under IEPA and what you would do or the administration would do to continue those policies.
Right. Well, certainly there's a high level of confidence that the Supreme Court's going to side with us. We think that we're really on firm ground. But I know you expect us to say that. And so then the question is, well, what if we're wrong about that? And it's important to think about that, too. There was a big call last night with all the principals to talk about if the Supreme Court were to rule against this IEPA tariff, what would the next step be? And Jameson Greer is all over it. There are a lot of other legal authorities that can reproduce the deals that we've made with other countries and can do so basically immediately. And so our expectation is that we're going to win. And if we don't win, then we know that we've got other tools that we can use that get us to the same place. And, I think that the IEPA authority is pretty clear. It's why it's the first choice of how to use it. But if the courts disagree, we'll, of course, respect that. But we got lots of other authorities that we could use to get to the same place.
Okay, I assume we'll get some articulation of that should it go against you. I asked the same question of you, but I asked it because I think it is relevant. You talk about productivity. I assume you're keeping a close eye on the impact of AI in the enterprise and what that's going to mean, what's going to mean for jobs, what it is going to mean for continued productivity. How are you viewing it at this point? What are your expectations as this year unfolds, as we all look to see whether there's going to be return capital, for example, for the hyperscalers, not to mention benefits for the enterprise?
Well, I think it's really quite clearly in the productivity data. There's also case studies. There's a guy at Stanford, Eric Grimson, who's really hitting it out of the park, studying the productivity boom from AI, and it's really quite impressive. I think that you remember back in the 90s, we're all old enough that we lived through that dot-com era, that it was kind of, the markets were really celebrating year after year the spread of the computer, but we had a hard time seeing the effect of the computer in the data. But now we're seeing it all over the place. We've got measured productivity is higher. Remember our old friend Bob Gordon had all this work that said computers aren't having any effect on productivity back in the 90s, but now we've got AI productivity estimates that are productivity's up to 4.5%. We had an earnings season where earnings surprised on the upside by more than they ever have in recent memory. And so AI is having a big effect on the operation of companies. And the way to think about it is that we've got AI has become a really excellent coach for managers and for workers to make them do their jobs better.
All right, so Kevin, when I talk to the people who are building the data centers, they keep coming back to the same problem. We don't have enough workers in this country, both skilled and unskilled. And it's the gating factor, being able to put up all the different, say, nuclear or nat gas or just all the electricity to link up on the grid to all these data centers. What do we do about not having enough people?
Right. Well, one of the things that's happening is that we're seeing a big increase in labor force participation. And as you saw in the data today, there have been sort of two things that have reduced the growth of the labor market. One of them is the reduction in federal government employment, precisely, which is down about 250,000 this year. And then the other is the deportation of illegals, many of them who had jobs. But native-born workers make up about 100% of the job gains that we've had this year. And the interesting thing is that the labor force participation of native-born workers is skyrocketing. And so I think that people are getting back off the sidelines. They see the huge wage growth. Actually, think about this. The wage growth this year is probably, given today's data, is about almost $3,000.
Tell me this is wrong. Is this wrong? This thing in the report, both the labor force participation rate is 62.4 and the employment population ratio at 59.7%. Changed little in December. These measures are some little change over the years, so this must be inaccurate.
Well, Kevin, there's also native-born unemployment is 4.1. That's up 0.4 year on year.
Look, the native-born employment in terms of the payroll survey is up by, 650,000. The bottom line is labor force participation has been moving forward, and it's not very long ago that it was way below this, and so our expectation is with wage growth as high as it is, at about $3,000 this year for the typical manufacturing worker, that more and more people are going to come off the sidelines. But that you're right that's one of the things that's going to have to drive growth going into this year is more labor supply, because we got all the capital spending that you can imagine. It's a capital spending boom, and you see that in the trade data with imports and capital goods, and with the groundbreakings of the factories. There are a heck of a lot of people that are putting up workers wanted signs all over the place.
Kevin, I want to move you from productivity to affordability. This news about the GSEs yesterday, there's a couple of takes on the street. One is that it's very much within the president's control and it can work pretty quickly. The other side says, what can $200 billion do in a $13 trillion market?
Mm-hmm. Right. Well, it's part of an overall plan that the president's going to announce at Davos. We've been working on it, really talking to Bitchute over the last couple of months. With a really big comprehensive housing plan. The president's going to announce the whole thing at Davos, and this is just a little small part of it to help. We see that there's a kind of hole in the housing market where people, especially between like the ages of 30 and 40, aren't buying homes the way they used to. If you look at why, then there are a lot of reasons, but inflation has made housing prices go up, and then of course mortgage rates have gone up. And so when President Trump was in office, the typical down payment for a home for the median family was $23,000. Now it's like $32,000. And so there's lots of stuff that needs to be fixed if we get people back into homes. And one of them is to make sure that mortgage rates are not too high. They've been way, way too high. And so I think this is an attempt to let markets know that we're keeping a close eye on mortgage rates, and that we're going to take actions like this should we need to.
Somebody that might have an impact on rates would be.
Hello, my name is Dr. Paul Cottrell. Thank you for joining. We are live streaming on Rumble and YouTube and my website, the-studio-reykjavik.com. We're simulcasting on X Spaces. Please help support the work that I do by donating. You can donate on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or Buy Me a Coffee. You could be a paid member to my Substack channel or my Patreon channel. The three big news points for today are the Supreme Court and their decision potentially will be released today about the tariffs and how that may affect the tariff agreements that happened in 2025. There's news out that the government will start buying mortgages and how that may add to liquidity and lower mortgage prices. So we're going to cover that. And the big news announcement was the jobs report that came out, where the headline unemployment rate is now at 4.4%, but new jobs being created is less than expected. So the headline number for the unemployment rate, 4.4%. So the question comes in, will the Federal Reserve view that as reason to not cut? And if it doesn't cut in January or February for the federal funds rate, then we're probably going to see sideways trading for the S&P 500. I think many market participants are waiting for the Federal Reserve to make another cut. Now, I think that what's going to happen is that we'll probably have a 50 basis point of cuts throughout 2026, probably 2 cuts of a 1/4 point each, but it might be prudent for the Federal Reserve to hold right now. We'll see. We'll see. So thank you for joining. I greatly appreciate it. Again, we are live streaming on Rumble, YouTube, and simulcasting on X Spaces.
To get back on track, and that's going to, take increased defense spending. And you'll see as we go forward into the budget debate this year that we're going to demand more defense spending. And what the president wants to do is make sure that the increase in defense spending doesn't just go into the profits, but it actually goes into the weapons that American soldiers need to protect us all.
Kevin, if tax refund season comes in as much of a tailwind as the Treasury Secretary seems to think, do you think that money gets spent or saved? And if it does get spent, does it drive some reflation?
Yeah, the history of it is that when you get a big refund season, that about half of the money gets spent over the next 6 months and half of the money gets saved, something about like that. There's a guy named Jonathan Parker at Princeton that's been studying this for his whole life. So our expectation is it would be a positive for consumption, and we're not really worried about the inflationary effects of that because we get so much supply coming online. Again, we're looking at massive productivity gains in the U.S. and really increased supply, which gives us that thing that we had in the 90s where there's a big productivity gain, positive supply shock, so you could have growth without runaway inflation. And so the refunds are going to be great for the people who get them. There's people who had tips or people who had overtime are going to get big refunds, and those refunds will help them have a better life. But I think that there's enough productive capacity in the U.S. to have that not have significant inflationary effects.
Finally, Kevin, I don't know if you're going to be a part of the meeting later today between the president and oil executives, but I am curious as to your thoughts. We've been speaking to those same executives, not on the record, but they've indicated just how much money it's going to take, the security guarantees they would want, so many other things that will take years to rebuild the infrastructure in Venezuela. What are your expectations from this meeting later today, to the extent you have any?
I think that you're going to be very positively surprised at how quickly things move in a positive direction, in part because we've got the best Secretary of Energy I've ever seen. The bottom line is that if you go into the sort of chemistry of oil, that there are some refineries where the main byproduct of the gasoline is kerosene, and then there are other refineries where the main byproduct for gasoline is asphalt. And so refining is a lot different depending on the type of oil you have. And in the southeastern United States, the refineries have really, over the years, especially given past history, been tuned towards the heavier, sour stuff that they have in Venezuela. And so we believe that by getting that stuff back to the U.S. and doing so in a way that rewards the Venezuelans and Americans is going to be really great for gasoline prices in the U.S. because we have the refining capacity to take that particular type of oil and ramp up production right away.
Certainly explains the action we've seen in the shares of some refiners here, Kevin. Appreciate the wide-ranging time.
Always good to be here.
Yep. Kevin Hassett, the National Economic Council Director.
Please go to my store, the-studio-reykjavik.com, and get the great products that I offer. This helps support the channel so I can grow it. Also, please share the links and ask your social media to follow me. You can also follow me on X and GETTR, TikTok, Substack. So the product that I want to talk about briefly here is the structural nanosilver soaps. This will help to cleanse your skin and neutralize. You can get it in lavender, in peppermint, also in lemongrass and charcoal tea tree. Now, these structural nanosilver soaps are very high quality and it will help the health of your skin. And again, it's made from structural nanosilver. It's going to help to neutralize. Another really important thing to prepare for is the cold season and the allergy season. And you can do that by getting the structural nanosilver drops that I have. You can get them in honey and lemon, cherry flavor, and also blueberry. Very high quality, made from structural nanosilver. If you have that throat irritation, take them right away to mitigate the problem. If you're having problems during the allergy season, also take them. And what this will do is create a secretion and protect your oral pharynx. Super important, especially for the cold season. If you're not feeling well, take them. If you're around people that aren't feeling well because of the cold season, take it prophylactically. Really important. And again, it helps to neutralize, so you're actually improving your oral cavity health. So please go to my store, the-studio-reykjavik.com. Get a few bags for your household and for work. You never know when you need them. Make sure you use discount 5. You get $5 off any order. I want you to save some money. And if you spend $100 or more, you get a free gift until supplies last. But it's 2026, get healthy. And if you follow my advice and you do use these supplements the way I'm telling you to, you're going to actually help to boost up your immune system and slow down the aging process. It's really simple. It's really simple. If you are less sick, less often, then you age slower. If you look at someone that is chronically sick, even if it's benign, common cold, if they're chronic, they do that every year, and it's a couple times a year or 3 times a year, they age faster. The reason why, you're building up free radicals, you have higher inflammation, and not only that, even something benign like a common cold takes 2 weeks to heal after the symptoms are all gone. So your body's remodeling. And if your body's remodeling, it can't focus on other things. So if you're less sick, the severity and the number of incidences, then you're actually slowing down the aging process. So please go to my store, get the products, slow down the aging process, boost up the immune system. All right, let's listen into CNBC here.
JP Morgan, healthcare conference, and you're seeing a lot of you're seeing a lot of deals and big news coming from that. That's part of it. You're seeing lots of people.
Yeah, I got Lily today.
Okay, so the market just opened for New York, and the S&P 500 is at 6,933. VIX is at 15.31. Euro USD is at 1.16. Oil's at 58.85. Bitcoin's at 90,785. Japanese yen is at 157.9. Natural gas is at 3.335. Now, I have a target for year end for the S&P 500 at 7,400 or to about 7,800. And it really is dependent on jobs, what the Federal Reserve is going to do, what's going to happen with AI and the creation or the destruction of jobs. All right, so with that, major resistance level at 7,000, major resistance level, all right, and that I'm concerned about a sideways trading because of the job market and what the Federal Reserve will do with rates, with the federal funds rate. So it's possible that we trade sideways for a little while. Now, oil is trading just under $59 a barrel for WTI. It's starting to creep up. Now, I think the trading range for oil right now is around 56 or 57 for the low bound, and the upper bound at about 60 to 61. All right, I'm longing oil and I'm longing natural gas. Now, natural gas is starting to drift down, but there's potentialness of it spiking up to about 3.5. But it has been drifting down, and we'll see what happens. But oil's definitely moving up compared to yesterday, and it's trading at 58.9. So I'll keep you abreast on that information. Now, what I want to do is I want to shift over to Bloomberg, because the government announced yesterday that they were going to buy back about $100 billion worth of mortgages.
So interesting. I mean, President Trump, not only has he this week said he doesn't want like Steve Schwarzman buying homes anymore, or any institutional buyers of homes. At the same time, I think President Xi of China reminds us that homes are for living, not investments. And you've got President Trump now doing Oval Office QE, like telling his guys at Fannie and Freddie to buy $200 billion of mortgage-backed securities.
That was 100.
Does this help, Rick? You think the housing crisis that you were talking about?
So I won't comment on the specific initiative. The only thing I will say is something I think housing is pivotal. By the way, I normally think people underestimate how important 3/4 of the wealth in this country by people is in their home.
Yeah.
And the way young people build wealth is through their home. The way the normal, by the way, I would even translate, I would even relate it to, I've showed a chart on fertility rates, marriage levels, etc. I think housing, if you have what is today, what is a moribund housing market, I think the impact is significantly more intense than people think. So any of the initiatives, I think, to move it, I think fiscal, I think obviously moving the mortgage rate, I think is helpful. And by the way, I don't think you have to move it that far. You know, we track prepayment speeds on mortgages, as you said, very, very closely. If you get the mortgage rate to 5.5 to 6, you've seen it, by the way, as the mortgage rate has come down, you create more velocity in terms of housing moving. You see it in existing home sales picking up. So anyway, I think that's the case. And I think if you get the mortgage rate down a bit, and by the way, I don't really think you need to get 10-year treasuries down 25, 30, 40 basis points. You just keep them there, keep rate volatility down. And then with fiscal, I think you do some pretty positive things. And I agree that it's arguably one of the most important things we could do today.
Hey, Rick, does anybody ever talk about getting the fertility rate up? Like, why don't we put some carrots out there to create more kids?
So I don't know if you know this, I'm actually becoming a grandfather today. So
Congratulations, Rick.
So I think, by the way, Matt, I don't know if you know this, but I had my anniversary once when I was on your show many years ago. So I think all the big events come when I'm talking to y'all. So there's something good there that being with y'all. So anyway, I
good for us. We're in trouble at home, I imagine.
Yeah, that is well close. I think there's a couple of things that are playing, and I do think it's right. I do think if you have young people, look at the student loan, 30% of student loans are in repayment today. That is unbelievable. That is unbelievable. Young people having a hard time. By the way, if you look at the youth unemployment rates now, I think it's 8.5%, maybe a little bit higher than that. Young people graduating, so I was at UMich, one of the surveys that showed people graduating college, it's the toughest time in literally a generation. So listen, I think there's some things, I think a lot of this is related, and I think a lot of this is, if we create initiatives, I think the next question before that was dead right. There is something that that are just hard to fight against. But I think there's a series of things that I think that can be done that will improve a bunch of things. And by the way, the thing that is critical, nominal GDP has to be high because we have a debt burden in this country that is large. And if we keep nominal GDP high, we keep employing more people, you bring that nominal GDP number up, which diffuses the debt burden.
Right.
Rick, if we could talk about your other child, which I realize is less important than your grandchild, but still important for.
This is the reason why building up the economic clustering by bringing back jobs in manufacturing and the tertiary businesses and the secondary businesses that are tied to that is going to bring down the debt to GDP ratio, because your GDP is going up. That's the denominator. And your GDP is the denominator and your numerator is the debt. So if you're growing your economy, you're bringing more people into the workforce and they're spending, and there's an economic cluster that's starting to develop because you're rebooting manufacturing. Even if a lot of the manufacturing is automation, you have all these tertiary businesses that are created and secondary businesses that are created. Who makes the robots? Who builds the line? Who manages it? Who does the quality control? What about the barber? What about the hair salon? What about the restaurants? Economic clustering is where it's at. When you lose the core of activity in a society, then that economic clustering starts to die and your debt to GDP ratio starts to go up, especially if you have lots of government stimulus, yet your productivity starts to decline. So it's really important to grow the job base. More people need to be employed.
and you can still run yield that is pretty significant in the portfolio and be global. Like look at interest rates around the world, particularly Europe, where you can, as a dollar investor, is quite attractive.
Is it, by the way, as you grow this quickly, we were just looking at the Eric Balchunas tweet there, and I have to think he's the foremost ETF analyst, most respected ETF analyst in the world. Is it more difficult as it grows to manage, or is it just such a huge space that you can't get that big?
Yeah, I mean, so by the way, it does, you think about in size, it's a fantastic question. There's a couple of things. First of all, part of why mortgages become more interesting is because they're so liquid and the size of that market is so expansive. You do think about other things, though, as you get larger that you can do in your portfolio where we can, we do a little bit more bespoke. We tend to keep this very liquid, but we can do a little bit more bespoke because of the size of it. So that gives us a little bit more flexibility. But there are some markets that are clear, like the CLO market or others, that you think about, how big you want to be in certain markets. So it does evolve a little bit at scale. I think there's a lot of things that make it easier to do it. I'd say on balance, it's a little bit easier at scale, but you do evolve it a bit in terms of how you're managing it, for sure.
Rick, how are you thinking about positioning heading into what might be a decision today on IEPA from the Supreme Court? If we don't have as much revenue coming in, and if it is ruled illegal, what kind of changes could you see to this curve?
Yeah, it's a great question. And so first of all, a couple of things. This has been out there for a while, whether it's today or when it comes out. I will say one thing. We buy, including recently, we buy a lot of volatility in the equity market because, well, quite frankly, volatility is cheap in the equity market, whereas I think it's high in the rates market. But we buy a lot of volatility. We have been recently as volatility's come down, as you all talked about stocks go up, volatility comes down. So we have built a decent amount of protection in as people interpret it. I've talked about it on your show before. I tend to like the front to the belly yield curve, particularly after a number like this, and they cheapen it up a little bit. The long end of the yield curve, not that interesting because of the volatility it gives you. So a few things around the edges around, gosh, can you hold a bit more front to belly of the yield curve? Can you buy a bit more volatility to protect some downside? And people talk about in fixed income, maybe you go a little bit higher quality for the time being and wait for things to play through.
We had Stephen Myron on, he was on surveillance yesterday. He thinks that the Fed is still 150 basis points too restrictive about. What are you watching in the data that could prove that out? Or what do you need to see in the next prints to show that the Fed is really behind the curve here?
I mean, I'm pretty resolute in my opinion. I've been for many, many months that I think 3% is a no-brainer in my mind, in that is an equilibrium rate. If inflation break-evens don't trade a lot. I'm not sure they're a great benchmark, but they're 2.3%. You're still above inflation break-evens. If you say, given what the labor market is telling you today, given that inflation, most of what is in inflation today is non-cyclical in services. We talked about shelter, and you can actually, if you drop rates, you bring shelter down. You build shelter, inflation down. But things like healthcare, education, insurance, trash, and et cetera, like these things are not interest rate sensitive. So I don't think inflation is, we're going to hurt inflation by getting that funds rate to any lower because of so much of it is non-cyclical in inflation. So I think 3 is certainly a place you can rest. Whether we have to go lower gets to Dan's question about like what is over, if you have an economy that's not running 5% nominal and we start slowing because the fiscal tailwind becomes a headwind, does the neutral rate have to be closer to 2? I think time will tell. But I don't think we'd have to go that much lower today. But I don't know, if it was me, I would get the rate to 3. I would be focused on longer on the yield curve because that's where real velocity in the system works. That's where we finance mortgages, credit, virtually everything in the system finances out the curve in the 5s to 10s roughly.
Hey, Rick, if I may, and I've got to ask because a lot of people listen to you, really appreciate your opinion, and want to know if it will be you part of making that decision. The Treasury Secretary yesterday said that you were one of the sole candidates who haven't yet had your interview. Might you be headed down to Washington, D.C. anytime soon?
Yeah, no, you anticipated my answer. I'm focused on my family situation we talked about in terms of, and then, This is the busiest time, quite frankly, I've ever seen in terms of what we're doing. We've got a lot of year-end stuff we do. Markets, funds were evolving, et cetera. So I don't know. I know it's a bad answer, but that's where I've never been more busy, so that's what I'm doing.
Well, Rick, I think I can speak for the entirety of the Open Interest family and wish you a congratulations to you.
Thanks.
Yes, congratulations.
Rick, thank you so much for joining us today. This is BlackRock's Rick Reader. All right, let's get a check on your equity market this morning. We're up 1/3% for the S&P 500. Look at the
Yeah, the S&P 500 is at 6,943. VIX is at 15. Please go to my store, the-studio-reykjavik.com. Get the Super Strong Relief. You apply this on a sore muscle, a sore joint, even on your neck or your temples. If you have a headache, a tension headache, it'll help to relieve it. So for bruises, for sprains, for pulled muscles, joint pain, this helps to relieve it. So please go to my store, the-studio-reykjavik.com, and get the Super Strong Relief. Make sure you use discount 5 and get $5 off. And detoxifying your body is really important. Taking zeolite every day, 3 small drops underneath your tongue and drink filtered water. You do that every day. It'll bind to heavy metals, toxins, and chemicals and allow you to urinate them out within 6 to 8 hours. You do that every day, you're boosting up your immune system and your endocrine system. Please go to my store, the-studio-reykjavik.com, and get the zeolite.
Well, good morning, and thank you for having me. I'm excited to talk about this jobs report because what we've seen is continued and positive job growth. It came in at 50,000 new jobs, exactly around where the market was predicting, and that shows that President Trump's economy is strong, that there's job creation, and if you even look back for the year as a whole, we saw that net job gain, and that's what we're excited about because that's benefiting American workers, and that's what our mission here as the Department of Labor is to make sure that the Americans are getting in the workforce, getting a job, and have the skills and training we need, and that's what we're seeing.
Keith, I just want to jump in because you talked about the net job growth of last year. Payrolls climbed 584,000. That's the weakest since 2020, when of course they were plunging because of COVID. And if you look back past the pandemic, you don't see annual increase of payrolls that low through the entire expansion through 2010 through 2019. Keith, couldn't you look at that and say, sure, jobs were added, but it wasn't that robust?
No, jobs were added in the right place, 54,000 in the private sector, negative job growth in the government sector, which is exactly what President Trump promised, to right-size the federal government, to get jobs back in the private sector, and that's what we're seeing. And especially with unemployment rates coming down and wages going up, that's the metrics we're looking at, and that's what we're excited to see from this report, and so is the market.
We still have seen manufacturing jobs. We lost almost 100,000 manufacturing jobs in 2025. And this was a sector that I think the president, it's fair to say, is very focused on. He wants to bring manufacturing back to these shores. Why do we have what looks like a manufacturing recession a year into his term?
Oh, well, look, what we're doing here is we're expecting significant manufacturing jobs. We're expecting significant reshoring. And here, because of the president's policies of bringing foreign dollars and bringing trillions of dollars in to this country, which we're going to see this year really come to fruition. We're seeing groundbreakings at factories. And as I travel across the country, what I see is that enthusiasm for those jobs coming back. But first, the infrastructure investments have to be made. We're seeing that. Companies are excited to hire American workers. They're excited to build in America, whether sectors across the spectrum here. And that's what we're focused on the Department of Labor, is for each of those, whether it's first construction, then manufacturing, for each sector that's coming back, we want to have a skilled American workforce. And that's what we're focused on with historic investments in skills trade, in apprenticeships, in Pell workforce grants, because we know those jobs are coming back. It's just those investment dollars are coming in, and then we're going to see a boom in construction and manufacturing this year.
Right, and just to underline Matt's point, we certainly didn't see that in the last report with construction, manufacturing, transportation losing jobs. What we did see jobs added, Keith, though, was the federal workforce, nudging up by just about 2,000 roles. Is the DOGE effect over? Are we now switching to net hiring? Is that what we should be expecting from this federal government?
No, look, for the federal government, with the voluntary resignations, people leaving, we saw huge decreases at certain points. And, from across 2025, which is what the president promised, to right-size the government, it's exactly what happened. So at the end of the year, that number was significantly down. for these federal government agencies to be able to operate at full function, which they can, with the right workforce. And that's what we saw from the overall job numbers from last year in the federal workforce.
I wonder if you still think, if we go with the narrative that the economy's hot, we're adding jobs, everything's fantastic, do we really need the Fed to cut rates? Because in that case, they don't seem too restrictive. How do you kind of square that circle?
Look, that's up to them. The president has been very clear on what needs to happen there. And inflation is down and wages are up. And that's really what our key metrics are at the Department of Labor. And we see that the GDP growth is better than expected and continues to be better expected. And what that's going to lead is to more jobs. And I promise you, the Labor Department will be there to skill those workers so American workers get those jobs. They have the underlying skills that they need, which they've been neglected before, but not any longer, because we know those jobs are coming and we want those jobs to go to Americans. And that's what we see consistently in this job report in this administration is net gains in native-born American workers, which reverses that trend, which was going the other way. And we want those Americans to get the opportunities and have the skills, and that's our commitment when those jobs come.
Okay, Keith, thank you very much for joining us. Unfortunately, we're going to have to leave it there. Labor deputies.
Okay, for the ones that have been paying attention to what I've been doing, I'm longing oil and I'm longing natural gas. Natural gas is starting to mean revert a little bit. It's trading at 3.3. I still think that it's going to go up to 3.5 before it starts to trend back down again. The oil is trading at 59.11. I had a couple positions in. I closed one of them just now. And I think the trading range for oil is 56 to about 61. Now there's probably going to be a resistance level at 60. So that was the reason why I closed out one of the positions, waiting for it to trend down, and then I'll probably buy back in. And that might happen today. Okay. Please go to my store, the-studio-reykjavik.com, and get the structural nano silver toothpaste. This has no fluoride. This will help the health of your oral cavity, neutralize. And when you have a good oral cavity, you're going to actually help your cardiovascular health and your valvular health. So please go to my store, get this toothpaste. It's very high quality and it helps to neutralize. And it's really important, especially during the winter season, because of the structural nano silver. Please go to my store and get the deodorants. They're dual purpose. They'll help to boost up your immune system and your endocrine system by detoxifying your body. All right. And you're going to smell good. All right. So you use it as a daily deodorant and it's going to help to detoxify your body. The reason why it works is because of the essential oils that are in these deodorant bars that will help to get rid of toxins. Now, you can get it in citrus and you can get it in peppermint, lavender, and tea tree. For males or for females, use it every day. It's dual purpose, very high quality deodorant. And to boost up that innate immune system, get the Max 14, Max 35, or Cleanse. They're all at different price points, but they basically do the same thing. Take a teaspoon of this every day, swish it in your mouth and gargle 20 seconds or so and then swallow. What this will do is help the health of your oral cavity and your oral pharynx, maintain your mucosal barrier, and help the health of the epithelial cells in your oral pharynx. They'll help to neutralize. It's super important. Now, when you do this, it's going to boost up your immune system and help the health of your oral cavity and neutralize. Now, if you aren't feeling well because of the cold season or you're around someone that's not feeling well, you want to take a tablespoon or two prophylactically if someone around you is not feeling well. But what you'll notice is that it's neutralizing, it's helping, and then you're clearing whatever you have. Now, I've been using this for over 5 years every day. And when you do this, you're improving your oral cavity, your oral pharynx, maintaining the health of your epithelial cells, which is super important. And you're boosting up your immune system, your innate immune system. So take it every day. And if you're not feeling well, take a tablespoon or two. All right, I want to listen in to CNBC here.
feeling unlucky. Now Taxes is an open door to new TurboTax stores. Meet our experts. They do your taxes, so you can walk out with confidence. Now this is Taxes.
What if you could clean your retainer at the touch of a button? No more brushing or tablets. Over 4 years ago, our team of engineers knew there had to be a quicker.
Let's bring in our jobs panel to react to the numbers. Natasha Sarin is professor at Yale Law School, president of the Budget Lab, and former Treasury official under President Biden. Peter Earle is the director of economics and senior research fellow at the American Institute for Economic Research. Sarah Malik is chief investment officer of Nuveen. And Sarah, I guess I'll just start with you. We'll get into the weeds on the numbers in a second. But as someone who needs to decide what to do with clients' money, this one looks okay, doesn't it? Is there anything that you saw that disturbs you or would cause you to hesitate about deploying money?
I'm not surprised to see markets not reacting much to this number. Expectations were for a slight beat to payrolls with consensus at 65,000. So the number is a slight disappointment, but not enough to move the Fed. And that's what's important here. I think we can still get 2 rate cuts in the back half of this year. Also, this is the second number that is starting to show the true health of the labor market. Remember, September and October's numbers were very volatile. We had a negative 162,000 government payrolls drop in the October numbers. So we're finally getting clarity. And what we're seeing is labor markets are just normalizing at a healthy rate. And if we can continue on this path, and I think that we can, because government payrolls will have less of an impact on the negative side in 2026, then that tells us that the economy is fine. We have fourth quarter earnings season right in front of us with expectations of 8% year-over-year earnings growth. That's a sign of a healthy market. And I think we can hold our premium and the markets can continue to rise up from here as long as earnings are strong and payrolls stay around this, 5-digit range.
And Natasha, so 50,000, a little bit light in a revision on the previous month. But, AI, maybe there's some factors for why that's happening. So that makes you worry a little bit. Maybe you're disappointed, but suddenly on 4.4, that you give it, then it take it. That's better.
I think what you're seeing is you're definitely seeing signs that the labor market is continuing to cool, and that is the case with the 50,000 number. And importantly, this is the first number that we've gotten in recent months that isn't contaminated by the government shutdown and its aftermath. So I actually think it's an important read. But what you also know, and we also saw that in the JOLTS data that we saw earlier this week, is that we are continuing to be in this sort of like low hire, low fire economy. And even with a relatively low unemployment rate, you aren't seeing hiring in the economy. And I think that has to do with the fact that there's just a lot of uncertainty right now. You're not exactly sure if you're a firm or if you're an employee, whether or not it makes sense to kind of take the leap because you're not sure whether jobs are going to be there to support you over the course of the choices that you might make.
And the Supreme Court might say something like in a couple of hours.
In 90 minutes, we might well see.
Here's something. I mean, it's interesting to think about how the markets react. Even if the courts strike down the tariffs in their entirety, right? What happens?
So,
and do you think the market goes crazy? Doesn't go crazy? Do you think that companies all of a sudden are going to change their strategies all again?
Or will they find another way to?
Well, he says he's going to.
I mean, importantly, the tariffs that are at stake in this case are about 2/3 of the tariffs that the administration has levied. Just this portion that's these IEEPA tariffs.
Right.
And so even if they're struck down, you've already seen the administration say kind of explicitly that they're looking into plans B with respect to other trade authorities that allow them to bring back tariffs.
If the Supreme Court strikes them down at 10 o'clock, that there's a press conference at 11 o'clock from the White House saying, just so you understand, we are now implementing these tariffs this way, this way, this way, and this way.
But I feel like that matters from the perspective of economic uncertainty because the effective tariff rate has changed some 80 times so far in this administration on different days. So what you're going to see is you're going to use this authority for this particular type of tariff to replicate this authority for this tariff, and it's actually not going to be this sort of cohesive, all of a sudden we're back exactly where we were previously in a way that I think is pretty uncertain and kind of tenuous from an economic.
Peter, you're so patient. You're waiting so patiently. You can just give us a 10-point summary of everything everyone said.
Sure. So 2 things. I mean, I think that the non-farm payrolls number reinforces the story that's been building for months, right? A labor market that's slowing, but in a pretty deliberate way.
Firms are holding on to workers. They're no longer expanding payrolls aggressively. And that combination is, I think, exactly what the Fed wants to see. Fewer openings, we're seeing hiring, stable employment. About tariffs, what I think is that there's a plan B already in effect, and if the IEEPA, the IEEPA tariffs get struck down, we'll see a replacement with quotas and all sorts of other means of protectionism which meet the definition, but not the letter, or the spirit, but not the letter of the law. So that's what I think. I think there's a backup plan in place that we'll see put in place, almost immediately.
Keyword. People.
I'm David Lichtenstein. I founded Lightstone in 1986. And one key guiding principle is that there's a difference between investments and speculation.
Welcome back. President Trump meeting with oil executives today at the White House to discuss plans to sell and rebuild Venezuelan oil and its infrastructure. Caracas is expected to send the United States between 30 and 50 million barrels of oil, which will then be sold at market prices by the U.S. government. President Trump further adding on Truth Social that Venezuela will be buying American-made products from the money received from that deal. Goods purchased will include medical devices, agricultural goods, energy equipment. Energy Secretary Chris Wright was with me yesterday and told us all about it on this program. Watch.
Now we're talking with the interim authorities in Venezuela and saying, look, we blockaded your oil. You're not going to be able to sell any oil and continue this criminal enterprise, or you can work with the United States. And of course, they're choosing, well, maybe we should work with the United States. So that oil, we're allowing it to flow again. It's marketed by the United States government. The money's going to flow into accounts. And then, of course, they'll get greater oil revenue than they were getting before. And then that money will be funded back to Venezuela. And now we've got nice aligned incentives. But is there interest to buy Venezuelan crude in American refineries? Absolutely. But there's interest in Europe and Asia and all around the world. A better energized world is a wealthier world and a more peaceful world. That's President Trump's agenda in a nutshell.
Joining me now is former Energy Secretary under President Trump in the first term is Dan Brulette. Great to see you, Secretary. Thanks for being here. How would you assess the happenings in Venezuela and President Trump's plans to control that oil?
Well, I think it's exciting times, not only for Americans. It adds to our energy security. It gives us a different geopolitical play, if you will. But it's also exciting for the Venezuelans. As Chris pointed out in the opening segment, this money will be used not only here in the United States, but in Venezuela. So much of this money has been directed to places like Hezbollah, the cartels, obviously, and obviously to the pockets of President Maduro and his cronies in the old government. So I think it's a great new day for Venezuela. I think it's an exciting time. I think it's an exciting time for the U.S. industry as well. And I know that they're meeting today at the White House to discuss the next steps in this plan.
Yeah, and I'm going to be speaking with August Pfluger, the representative from Texas, in a little bit, because he's got some issues with oil prices going down to levels where it's not going to be economic for the oil companies. And I'm sure that's going to come up in this conversation today with the president. You're talking about $50 a barrel oil. Is the incentive still in place for Chevron and the like to actually invest tens of millions or $1 billion long term in terms of exploiting that when you're getting $50 for a barrel of oil?
It gets very difficult. I mean, the cost structure here in the United States is obviously different than it is in places like Saudi Arabia. So $50 gets very, very difficult for U.S. producers, especially here in the Permian or in the Bakken in North Dakota, South Dakota.
Exactly.
But it's important to remember that, what we're doing here, or at least what the president is attempting to do here, is to fix the situation in Venezuela. Venezuela, at its high water mark, only produced roughly 3.5 million barrels per day. The world uses 103 or 104 million barrels every single day. We use 19 million barrels of oil here in the United States every day. So adding 3 million barrels is not going to fundamentally change the oil markets around the world. What it will do, though, is provide relief, especially for our refineries in the Gulf Coast region who use this heavy, sour crude to refine diesel and gasoline. And having that
All right. Breaking news, the Michigan data that's coming out, the 5 to 10 year inflation expectation is 3.4% versus 3.2. So inflation expectation is going up And you know, there's a tendency that the UMich data that comes out is, especially lately, has been more pessimistic. All right, Michigan data, this UMich data, January current conditions rises. UMich preliminary January consumer sentiment rises to 54 versus 53.5. So there's a slight increase in positivity in the market based on consumer sentiment. January expectation index rises to 55 versus 54.6. This is preliminary. And I'm not seeing much of a move in the S&P 500 right now. It's trading at 6,936. 1 year inflation expectation unchanged at 4.2%. There's no way that the 1 year inflation number is going to be 4.2. This is what I mean. This is that the UMich data always seems to be like almost maybe 1.25% higher in terms of inflation. Inflation is probably going to be below 3%, the headline number. So, you know, take it for what it is. But I just, you know, if it was that high, then the Federal Reserve would not be lowering rates. They would be staying steady to try to suppress inflation. But why would it be going, you know, why would the consumers think that it's going to be going up if tariffs may be abated by the Supreme Court? Oh, Supreme Court looks like there's some sort of breaking news here.
All right, let us know when the next decision comes due, and I guess we'll do this all over again. Thank you, David. Amen Jabbers. We also have some data crossing on top of jobs already today. Consumer sentiment. Rick Santelli has it for us. Rick.
Yes, Sarah, there's some surprises here. These are University of Michigan sentiment with inflation gauges for January preliminary, which means in a couple weeks they may be modified. Headline number comes in better than expectations at 54. That would be the best level since Sep of last year. And if you look at current conditions, 52.4. That's also above expectations, and both these are sequentially higher than a previous look. That's the best since October of last year. Now, let's look at expectations. It equals expectations at 55 and 54.6 in the rearview mirror, and all three are sequentially higher. That will be the best since August of 25. Now, the inflation gauges, and these things really did get out of whack for a while. 4.2, 1/10 warmer than expected, equals the rearview mirror. That's 1 year inflation. It equals where the read was in December of last year, the last month of 25. To find a lower number, you're going to January of last year. And finally, the 5 to 10 year outlook comes in warm on both sides, whether you're looking in the rearview mirror or through the windshield, 3.4%. That equals where we were in November of 25. To find a higher number, you're going back to October of 25. Now, real quickly here we hover at 418. Okay, y'all remember Pac-Man? We've taken so many bites on the 10-year on the top of this range, right around 419. And 419 happens to be where we settled last week, so that would be unchanged on the week. Pay close attention to that 420 level. Should we settle above that, I would look for significant selling to be coming in next week. Sarah, back to you.
Yeah, just some color here from this report that you just shared, Rick. Improvements in January we're seeing among lower income consumers. That's good, because we know that was a weak spot. And Rick, they also say consumers' worries about tariffs appear to be gradually receding. That's also a notable improvement.
Absolutely, and considering the tariff issue, listen, Steve Leisman always says he's waiting for some effects down the road. But boy, I'll tell you, it's like waiting for Godot. So that doesn't surprise me that the respondents had that impression.
Okay, thank you, Rick. Thank you very much. Rick Santelli on consumer sentiment, jumping a little bit this past month. Look, it was Jobs Day, and just to rehash the numbers a little bit, there was good news and there was bad news in this report. So the good news, we'll start there, I'm always an optimist, is that unemployment rate fell. Remember I said this was really important. This is what the Fed is watching very closely. It was 4.6%, and it came down to 4.4%. David, if you don't round the number, it was actually 4.375%.
Yes.
So that was good news. Did you make that point too? Yeah, I mean, look, I think it suggests, along with the fact that we did see wage growth, that we're not in any kind of labor market recession or terrible spot in the labor market. Now, the bad news is we didn't get as much payroll growth as expected, and we only grew 50,000 jobs during the month. That was weak. We got revisions lower for the prior few months that were weaker and that subtracted job growth. You can look at this in a number of ways, but one way to look at it, David, is that we know the supply of labor is down because of the immigration policies, because of the visa policies. That it would make sense that the hiring comes down as labor supply comes down. Does it speak to overall weakness in terms of businesses wanting to hire? Maybe a little bit, but there's wage growth. 3.8% year-on-year wage growth is a sign that they're still paying for those workers, and with the unemployment rate down, you're not seeing necessarily some big stress in the labor market. The Fed probably is going to be heartened to see the unemployment rate go down, but just to add to it, the Atlanta Fed GDP number, which tracks real time, puts in these inputs for fourth quarter, is now tracking above 5%, 5.4%. So we continue this recovery, or this period that we're in, guys, where it's high growth, high productivity, high investment in places like AI, and lower hiring than we're used to in this kind of economic expansion, and that's where we are.
Okay.
Okay.
I believe you.
So there you have it. So nothing to be so alarmed about. And also, by the way, if you're looking for Fed cuts this year, there are those who look at these numbers and say, all right, unemployment rate came down a little bit, but hiring has really slowed. So, and we're not seeing evidence of very high inflation, so the Fed can keep cutting. And for those that are saying the Fed shouldn't cut, they look at this and they say, economy's still healthy, job growth's okay, we'll watch it, but inflation is still sticky. They shouldn't cut this year. There's still something for everything.
Let's talk about this some more with Mohammed Al-Arian joins us here at Post 9. Great to have you, Mohammed. Welcome.
Thanks.
It is the weakest year of job growth outside of recession in 20 plus years. Is that okay?
It is okay for where we are in the cycle. In fact, relative to expectation, as Sarah said, there's something for everyone in this report, and it's no drama. And it reinforces the notion that Chair Powell has that we are well positioned to win. The big issue in my mind is that increasingly we see employment decoupled from output. And we had Kevin Hassett on earlier, and he said it's all about productivity, and it's going to raise three issues. One is who gets the benefits of this productivity? Does it go to companies, or does it go to the workers? And this is really important.
Of course, it's going to go to the companies.
This is a real issue. It has economic, political, and social aspects.
It's going to definitely go to the...
I think the inflation number next week is going to be even more important. So no drama relative to expectations, but it highlights these bigger issues that we're going to deal through this year.
Right. To your point about the fight between capital and labor, I mean, pre-tax margins on companies are near record highs, and the employee share of corporate income is close to multi-year lows. I think we know who's winning that fight.
But who's going to continue to win? So we have an opportunity now with the productivity gain to pass on more to the workers. And this becomes really important in terms of affordability. It's not just about prices. The focus of the administration about the price of energy, the price of mortgages we saw yesterday, the price of pharmaceuticals. It's also about income. Because that's what affordability is. It's prices and income. So that's going to be a critical issue. And it's going to play out not just in terms of the economics, but also in terms of the politics.
I mean, we did see wage growth in this report. Do you think it's just an indication that you said it depends where we are in the cycle, that we're late cycle and we're at full employment?
I think that at 4.4, we are near full employment, and we see contraction in labor supply. So right. Yes, I think one of the issues that worries people like me is the labor force participation at 62.4. I'd like to see it higher, because there are parts of the economy that do not have the labor they need right now. But that is an issue of reskilling, retooling. It's a much deeper issue about the supply side of the labor market.
So what do you think the Fed does?
So I think the Fed does nothing.
In January, but then what?
I think we probably saw the last cut in this tenure for Chair Powell. I think they will expect that they will think that, quote, well positioned. You'll hear that phrase over and over, we're well positioned to wait. And then the question becomes, how much influence does the next Fed chair have and how quickly?
Do you think, we got 10-year highest since basically Labor Day. Rick was just talking about the 4.2 level. Do you think they're starting to test out, as they normally do, new potential chairs? Certainly a new chair once it comes.
And you know, Carl, I've been very surprised by how range-bound the 10-year has been. There's been so much going on, but it is range-bound. And I think that has to do with policy. That people see policy effects on both sides, and therefore they're frozen into this range-bound trading. We need to see something breaking. I cannot stress enough how important next Tuesday's inflation number is. That is the focus now. The jobs report, as Sarah said, says, you know, the labor market is fine. It's not great, it's not bad, it's fine. How about inflation? And the UMich number, where, as Rick said, it's stuck pretty high up there, is really suggests that we should focus on this inflation number.
Some of the estimates on, I think, year-on-year core are south of 3, right? What are you looking for? Any ideas?
There's some on north of 3. A lot depends on what you do with housing. Look at services. The PMI number last week had the price component still well above 60. So it's the service sector that you really have to focus on.
I'm a broken record on the impact of AI in the workplace, the longer-term impact, of course, which we don't know. When you talk about the diversion or an increase in margin/productivity of businesses, whether the worker will benefit, what about if they're all losing their jobs? What are we going to do then?
So, David, I share not only your focus, but your worry. And too many CEOs now think only of the labor displacement side of AI. Think of cost minimization. If you, and I can name you Walmart, Accenture, Google, think of the labor enhancing side. And if we are really to benefit from this AI revolution, which I think is so consequential, we've got to shift the focus more to labor displacement versus labor enhancement. Let's stop talking about those working on AI, and let's talk more about those working with AI. Because unless we have a policy for those working with AI, it's going to harm labor in a major way.
Yep. So how would that evolve then in terms of a policy and or the ability to actually impose it on business?
So impose it is the wrong phrase. It's to formulate it in collaboration with business. It's to have a
what's going to happen? He's wrong. What's going to happen is that a lot of people are going to get laid off. People aren't going to get employed. The market's going to start going down. The CEOs are going to freak out that their revenues are going down because people don't have jobs. You're going to have defaults on car loans and mortgages. And then all of a sudden, the CEOs are going to realize the decoupling of labor and capital because of AI actually sends a negative feedback loop to the company and causes problems. But yet the CEO is only focused on their own P&L, their profit and loss statement, and their balance sheet. That's all they care about, and their stock price. And they see that short term, by cutting workers, it's going to be able to improve their bottom line. Short term. Then all of a sudden, lots of different companies do this, and then you start to have a faltering economy, and then the negative feedback loop kicks in. The CEOs are worried about the falling stock price. The CEOs are worried about the unemployment rate going up. It hasn't happened yet, but the unemployment rate will go up. And then it's structural. People are freaked out. People are not buying stuff. And then all of a sudden, there is downgrades one after another with these companies. And then the CEOs realize we shouldn't have cut so many workers, but it's already too late. And then new businesses will have to be created, and it'll be slow to bring back some of those employees or bring into the economy those ones that were laid off. But most of the CEOs will view AI as not enhancement. It will view AI as a replacement of the employee. So maybe they can get rid of 5% of their workforce or 10% of the workforce and get a better bottom line. But if all the companies are doing it, let's just say there was 500 companies in the country. There are a lot more than 500. But let's just focus on the 500 on the S&P 500, all right? If all of them did this, short term, they would be saving a lot of money. Their stock price would be going up because the analysts would say, oh, look, your performance on your P&L is better. Your income statement's better. Your costs are less. Your revenues are coming in because other people still have jobs. But then all of a sudden, people start realizing that more and more of these companies are laying people off or not hiring. Spending starts to go down. There's a decoupling of labor and capital, and therefore the market starts to falter. So the CEOs being greedy because of trying to improve their balance sheet, not realizing the systemic risk that they're creating with AI. Now, how is this any different than what happened during the Lehman crisis? All right? See, today, CEOs are viewing AI as, well, I can reduce my risk exposure to employees. I can reduce my costs. I can reduce my insurance. I can reduce blah, blah, blah. I can reduce my footprint at the corporate headquarters or whatever. So they can save all this money. Not realizing that the decoupling of labor and capital, when you do this across the whole spectrum of the economy, is going to cause the economy to falter. Mortgages start to default. Car loans start to default. People aren't spending as much because they can't, because they're laid off. All right? So they think in their little micro bubble that they're reducing their risk by reducing the number of employees they have, and that they're having a better return on their capital, better return. So their stock price will go up short term. Then all of a sudden, everybody's doing this, and the stock price starts to go down. Now, think about what happened during the mortgage-backed security debacle back in 2006, 2007, 2008. Banks thought that they could just have all these subprime mortgages, process them, have a processing fee, wrap them up in a mortgage-backed security, and sell them. And that you take the risk off your balance sheet, not realizing that someone is buying them. And it just kept on building up and up and up and up. And then all of a sudden, people stopped having the ability to pay their mortgage. A lot of these subprime mortgages were on a variable rate, so they were going to be resetting, and people couldn't afford it. And then all of a sudden, the mortgage-backed securities started to falter. And you had a lot of counterparty risk because of default swaps. They thought, well, wait a minute. I bought a bunch of mortgage-backed securities, but I bought a credit default swap just in case that it failed. Well, if everyone's doing that, then the insurance company can't bail out everybody. Just like if an insurance company goes to a city and insures all the homes, but there's a hurricane that comes in and wipes them all out, the insurance company is bankrupt. They can't pay for everybody. Because the way insurance works is that they're taking in a premium, and only a certain percentage of homes at any given moment would have a problem. Not all of them. Same thing happened with the mortgage-backed security and the credit default swaps. They didn't expect that all of them were to fail. Then there were some nefarious things in the way they were packaging it. They put subprime stuff with prime and gave it a prime rating. But the point here is that they thought they could take risk off their balance sheet. They thought that they can shove risk to someone else. Just like how CEOs think that they can just lay off people, implement AI, and they are an island to themselves. They don't realize the negative feedback loop that this is going to create. When labor is decoupled with capital, you will have a major problem, especially when you have a society that's debt-laden with car loans, with mortgages, with credit cards, with student loans. This is a big problem. So if most of the CEOs are thinking getting, reducing headcount because of AI is going to cause a systemic risk. Now, if it's employee enhancement, if it's job enhancement, if it allows for more productivity and more can be created, then you're going to have a growing economy. But if you use AI as a structural means to reduce headcount at your company and not to grow the pie, but to actually just have a bigger slice to the investor class, you're going to have a problem. You're going to have a problem in the society. And that was the big lesson learned during 2006, 2007, 2008. You cannot shift risk to someone else because everyone is connected.
Distinguish between the different tranches of IEEPA tariffs. So throw out the reciprocal tariffs, but keep the fentanyl tariffs on Canada, Mexico, and China based on the idea that that's a real emergency.
Okay,
I think that's not where they're going to want to land. I really
all right,
do not
so
think they wanna
Supreme
be
Court
looking
will not issue decision on tariffs today. All right, so we just found that out. Please go to my store, the-studio-reykjavik.com, and get the vitamin C and magnesium. Will boost up this will boost up the immune system, help with your skin. Vitamin C helps with skin. And also magnesium will help with brain function. Magnesium and zinc helps with the immune system and brain function. Take them together for max benefit. Should be doing this every day, but especially during the winter season. Now, the foundation of my core anti-aging protocol is the multivitamin. This has the multivitamins that you need for proper enzymatic activity. It's easy to digest. And also the probiotics. You can get it in veggie cap form or powdered form. And with a good probiotic, you're improving your absorption, you're improving your cellular metabolism, you're improving your gut biome and reducing inflammation, boosting up your immune system. You're helping the health of your liver because you're improving the communication between your liver and your gut. And you're improving the communication between your gut and your brain. You will actually reduce brain fog by having a good gut biome. You're going to be able to concentrate better, and you're going to be able to sleep better, just with a good gut biome. And your skin will improve. Good health starts at the gut. So please go to my store, get the multivitamin, and get the probiotics. Use discount 5 and get $5 off anywhere.
extensive margin to cover USMCA compliant Mexican imports or goods that are currently exempt. So I think the winners and losers are you're going to look very similar to who's already been.
Well, it's more speculation, at least for now, Toby. Appreciate the help. Good to see you. Have a good weekend.
So to come on the show, Goldman's first reaction to this morning's jobs report. Chief Economist Jan Hatzius joins us, as always, on Jobs Day here at Post 9. Plus, GM, the latest automaker to take a multi-billion-dollar hit as they throw in the towel on EV plans, the fallout, and who could see pain next. But first, Meta making a big bet on nuclear power, sending shares of its new partner surging today. What investors need to know in just a moment.
Jing, based on disinflation data that we're seeing, we saw it this morning in wage growth sort of holding steady. There was a fear that wage growth was going to pick up. We're also seeing some disinflation come through on the housing or shelter side of the CPI equation. So we'll be watching that really closely. If you look at some of the real-time measures of housing, they're showing a lot more slowing than sort of the official BLS data is telling us. So things like Zillow and Apartment List are telling us that the shelter component's closer to flat on a year-over-year basis. We don't really think that bonds are picking up on some of that. So we're leaning into fixed income here on a high-quality basis. Given those elevated yields, we do expect yields to come down over the course of the year.
So, Emily, if we look at 2025 and looking ahead to 26, boy, 25 was a great year in equities, very strong year in fixed income. How are you and your teams there kind of thinking about 26 in terms of where the opportunities are?
Yeah, so we're constructive on stocks. I think that there is a number of catalysts in place. You've got the one big beautiful bill, which could help potentially bring the effective corporate tax rate down to that immediate depreciation of CapEx. We think it's modestly accretive to the consumer as well. If oil prices can come down, that's sort of another positive. A weaker dollar would also be kind of a gift that keeps on giving into 2026. 40% of the revenues of S&P 500 companies are derived from overseas, so the weaker dollar helps on that front as well. The challenge, of course, though, is the starting point at 22 times forward earnings. It's going to be tough to get any more multiple expansion, so earnings really does need to be the key driver. And then on the fixed income side, like I mentioned, I do think bonds are mispriced here, so I think bonds can do some more heavy lifting in portfolios with incomes in the 4 to 5% range on high quality bonds.
When it comes to equities, we get earnings next week. The fourth quarter numbers come out, and of course, the big banks will start us off. What do you think we'll actually learn from these banks, especially given that we can't really rely on a lot of the data? As you mentioned, the inflation data next week might still be kind of messy.
Yeah, analysts are expecting high single-digit earnings growth, so the bar is not crazy high coming into this quarter. I'm just excited to talk about earnings and not geopolitical developments, Charlotte. I don't know about you guys, but that's going to be really refreshing. For us, as long as the economy and the labor market continue to hold in, we think cyclical areas of the market like financials can do just fine. They're also benefiting from the wealth accumulation that we've seen. So in a strange way, the market has been in the driver's seat of the economy. So we've seen just incredible consumer net worth being built up. It's in stocks, it's in real estate, and all of that sort of wealth accumulation and appreciation is in a way impacted or helped the financial sector. So the AI trade, which has buoyed investors' portfolios, is actually feeding right back into the cyclical side of the U.S. economy, benefiting the banks. So we think banks are going to come through with some positive developments, given the strength of the consumer, given the strength of the labor market, and given the strength of the stock market.
Emily, how about U.S. versus non-U.S.? We saw as strong as the equity performance was in the U.S. in 2025, and much of the rest of the world, it was even better than that. We're hearing even people over the last 12 months talk about emerging market debt as well here. What do you think about the global allocation these days?
Yeah, Paul, a lot of it does come down to the weaker dollar. The dollar was down almost 10% in 2025, and that can be hugely accretive to international equities as you're a U.S. unhedged investor. It was pretty remarkable to watch the momentum that got built in overseas markets. I mean, you had things like the Kospi and Spain, up 80, 100% last year, really on technicals and momentum. It's just, we're living in this world of momentum where you sort of trade first and ask questions later. When you look at the fundamental backdrop for non-U.S. equities, it's like, okay. Earnings were about 3% last year. I don't know that justifies a 30+% return in Europe on 3% earnings growth. The economic data have been, I would say, mediocre. We're in sort of a malaise if you look at things like PMIs overseas, yet those markets are booming. It is tough to stop this momentum trade train, I guess, internationally right now. So we do have some exposure there. If the dollar weakens, we think it can help non-U.S. equities, but we see better earnings growth prospects here in the United States.
All right, Emily, thank you so much for joining us, and have a great weekend to you. Emily Rowland, Co-Chief Investment Strategist for Manulife John Hancock in Boston. Let's go back to the tech sector. We can't stray too far from it ever when we talk about the market. And take a look at some of the Mag 7 names. Alphabet this week has moved ahead of Apple in terms of market cap, and Meta signing this big power generation deal with this company called Vistra, which has had a really volatile week. Let's bring in Mandeep Singh right now. Mandeep is our global tech research head at Bloomberg Intelligence. And Mandeep, just put into context for us this multi-gigawatt nuclear deal that Meta has signed for its AI data centers. How should we think about this?
Yeah, I mean, the best way to frame it is how these companies are spending their capex. And we know roughly, 1 gigawatt of AI data center capacity costs about $50 billion. Again, that depends on the region, the source of energy and land, etc. But that's a rough ballpark. So when you think about 6.6 gigawatt and We already know OpenAI has committed to, about 26 gigawatts. So clearly these companies have big ambitions, and what it suggests is a company like Meta, which will very well spend over $100 billion in CapEx this year in 2026, may stay on that path for at least the next 3 to 4 years because they believe, they have a lot of applications when it comes to their own consumption of AI data centers, and they seem to be confident about their own model, which has so far trailed the likes of OpenAI, Anthropic, and Gemini in terms of capabilities, but it sounds like they want to make sure they have the capacity to deploy AI, and that's where nuclear is an interesting choice because a lot of the other hyperscalers have gone for more natural gas turbines, but we know there's a big backlog with someone like GE Vernova for their natural gas turbines. So from that perspective, nuclear is an interesting choice, as an alternate.
What are the big tech companies, these big AI companies, saying about their confidence in the reliability of power in the next 5, 10, 20 years? Because a lot of folks are saying that really could be the gating issue for the development and evolution of AI.
Yeah, look, I was at CES where Jensen highlighted, the reason why companies would upgrade quickly to the latest Rubin architecture is because they give, Rubin will give them more tokens per unit of power, which is really a way to emphasize the efficiency of how you utilize your available power. And so from that perspective, everyone sees very long lead times when it comes to adding new power, and they want to maximize, the usage and utilization of whatever they have right now. And look, you could argue, there are some other sources which may have shorter lead times, like solar or battery packs. But in this case, given the size of power that these companies need for running, we're talking about 1 gigawatt data center. It's very hard to think about too many sources of energy that will give you that sort of power, and that's where the lead times are so long.
All right, Mandeep, thanks so much for joining us. Appreciate it. As always, Mandeep Singh, Senior Tech Industry Analyst for Bloomberg Intelligence. Again, kind of a cool deal here. Meta buying a bunch of electricity capacity to fuel its data centers in the future. Probably going to see more of these types of deals from these big users of energy. S&P up 37 points, the Dow up 175, the NASDAQ up 155, that's 0.6%. So nice turnaround in the markets here. We'll have more coming up. This is Bloomberg. Good morning.
Better. Yeah. Not only a drop on the month, but also a downward revision. So the increase in the unemployment rate that we've seen over the last 6 to 12 months looks somewhat less concerning now. And I think if I'm the Federal Reserve, that's probably what I'm going to be more focused on, really the balance between demand and supply, especially given the uncertainty around the break-even rate of payroll growth.
Well, the other thing they're going to be talking about, which sort of all investors and economists are scratching their heads over, is this boom we're seeing in the economy and in productivity, and it's not really leading to a boom in job creation. And I guess the question is why? Is it AI? Is it that we're at full employment? Is it that labor supply is just way down because of immigration policies? What's the reason?
I'd say a couple things. One, there is quite a lot of uncertainty about how quickly GDP is actually growing. We still don't have a lot of the monthly source data. We've had a lot of noise in the GDP numbers because of tariff front loading, because of the shutdown. So I would withhold judgment a little bit on just how much GDP growth we're seeing. What is clear, though, is that we've seen an acceleration in productivity growth over the last 5 years relative to the 10, 15 years before that. And that, of course, means the speed limit for the economy is different from what it was. In the near term, I would put more weight, especially from the Fed's perspective, on the job market numbers. We're now actually sort of caught up in terms of having a full slate of information. As far as the jobs numbers are concerned, the shutdown's in the rearview mirror. We have the information, but that's not yet true for GDP.
What's your stance on CPI?
Well, I think in 2026 as a whole, I'm in the disinflationary camp because the sideways move in core inflation that we had in 2025 was related to tariff pass-through. We're estimating about 50 basis points of contribution. So you need to take that out of the underlying rate. So the underlying rate is still coming down. Wage growth is still trending down. Rent inflation is still trending down. So I think by the end of the year, when the tariff impact will have sort of cycled through the year-on-year comparisons to a significant degree, I think we'll be not too far from the 2% target.
Are we by year end?
By year end, we're at 2.1, 2.2%.
Are we through the fattest part of the tariff pass-through?
I think best guess, and of course a lot of that is going to depend on what happens to tariffs, when we get a Supreme Court decision, what will be replaced, etc. But under our baseline assumptions, we're through 50 basis points and have another 30 or 40 basis points to go.
Does the move on GSEs, can they meaningfully compress the spread for mortgages?
I mean, I do think there's a good case for mortgage rates to, come down somewhat. The spreads have been very elevated, and I think market dynamics are already pushing in the direction of bringing that down somewhat. And if the GSEs increase support, I think that will reinforce that. With that said, longer-term yields, I don't think are going to come down a lot as, over the next several years. I think the term premium at the longer end of the curve is probably going to edge higher. We still have a very large budget imbalance, so the debt to GDP ratio is increasing, but the spread, I think, can compress.
Okay, wait, I just want to dig into this a little. So you're talking about the announcement from President Trump yesterday that Fannie and Freddie are going to be buying mortgage-backed securities in the market to try to lower interest rates. It's interesting timing because it's at a time where the Federal Reserve has been letting those roll off of its balance sheet, right? They're not outright selling, but they're letting them roll off and reinvesting in treasuries. So is there an offset impact here where Fannie and Freddie are buying and they're rolling it off?
Yeah,
Can you talk about that?
I think there is an offset, and of course a lot of the moves in the market are ultimately offsetting. So I tend to look more at the fundamentals. For me, the fundamentals are that long-term treasury yields, I think, are going to be around the current levels and maybe edge higher over time because of a widening of the term premium. But at the same time, the spread between mortgage-backed securities and treasuries has been relatively wide, and I think that can come in over time.
Back to the to sort of end on the jobs report. Manufacturing jobs down 75,000 year over year, another 8,000 lost in December. I'm just curious as to whether that surprises you at all, Jan, given the trade policies were designed to bring manufacturing jobs going higher.
I mean, it doesn't surprise me really relative to the other information that we've seen about the manufacturing sector, including the employment components of the various business surveys. Those have continued to point to stagnant or declining employment growth in the manufacturing sector, and I don't expect that to change quickly. We do have somewhat faster GDP growth, underlying GDP growth in the first half of this year, and some of that is driven by tax support and full expensing of capital equipment and plants. That could give you some support, but I don't think it's going to change dramatically.
Hey, Jan. Really good to have you, as always, on a jobs day.
Great to be on.
Jan Hatzius from Goldman Sachs.
When we come back, the co-president of one of the largest owners of single-family homes in the U.S. will get his take on this plan to ban institutional investors from buying some single family. Stephen Scher will join us next hour on Money Movers. First, though, GM under some pressure today as the company becomes the latest to take a hit from.
Please go to my store, the-studio-reykjavik.com, and get the digestive enzyme complex. This digestive enzyme complex will help you to break up carbohydrates, proteins, and lipids, reduce the stress on your pancreas, and allow you to absorb your nutrients with less stress. Super important. Olive leaf extract, dual purpose. It'll boost up your immune system and help with your cardiovascular system. Brings down inflammation and helps to control the lipid profile. Vitamin D3, super important to take every day. Do some resistance training, take in some calcium, either through a calcium supplement or drinking milk. By doing the resistance training and taking vitamin D3, you're improving your bone density. Vitamin D3 is a cofactor for gene expression, and vitamin D3 helps to get rid of cells that need to go into apoptosis if they're infected. That's the reason why you need to take vitamin D3 during the cold season. Olive leaf, omega-3. Omega-3 will bring down inflammation and help to control your lipid profile, bring down the LDL levels and help to improve your HDL levels. There's olive leaf extract does work synergistically with omega-3. Now, omega-3 will also help to reduce overclotting of your red blood cells. So you should be taking omega-3 every day to help with your cardiovascular health. So take the omega-3 for the cardiovascular health, the D3, especially for bone density and to help to get rid of cells that need to go into apoptosis, the olive leaf extract to help with your immune system and your cardiovascular system, and the digestive enzyme complex to help to digest your food and reduce the stress on your pancreas. Use discount 5, you get $5 off any order. If you spend $100 or more, you get a free gift until supplies last. Now, in terms of homes, this idea of preventing institutions from buying single-family homes, I think is a good idea. Why? Because they've been buying up the stock at a premium and raising the cost, and the affordability to being able to purchase a home is reduced, especially for younger individuals. And these companies are buying these homes. They are not only buying them at a premium, bringing up the price of the homes in an area, but they're trying to rent them out now. All right, so it kind of, if they buy a lot in an area, it kind of brings down the actual quality of the neighborhood. So I think it's a combination of bringing down the quality of the neighborhood, bringing up the price of the cost of homes so it's out of the reach for most people. These companies are starting to realize that with the insurance and the maintenance and managing all these different properties, it's becoming a problem. So some of them are starting to sell off properties. So if you are a homeowner, right, and this type of activity is taking place in your area, you have a capital appreciation. Oh, so you love it. But if you're trying to buy a home, you can't, because everything's at an elevated price. So when they start to sell off these properties, you're going to actually see a suppression of the actual cost of the homes. The homes are going to start to go down because these companies are going to start to dump the inventory. All right, let's listen into what's going on with GM.
$6 billion will be written off by General Motors. That will impact the net income, but EBITDA is not going to be impacted by this. Q3, they wrote off $1.6 billion. And again, the company has announced it expects more of these. They said it again yesterday. More of these charges are expected in 2026. For General Motors, its fourth quarter EV sales were down 43%. Had a big surge at the end of the EV incentives, which ended in September. Q3 numbers were big. Now we're seeing the slowdown in EV demand in this country, down 43% in the fourth quarter for General Motors. Overall, EVs made up just about 7.8% of total sales in the United States last year. Hybrids coming in at just over 14%. And there you see internal combustion engine vehicles now down under 80% of the vehicles sold last year in this country at 77.8%. If you take a look at shares of General Motors, keep in mind that this company will be reporting its Q4 financials on January 27th. No doubt, guys, they'll talk more extensively about the adjustments they've already announced when it comes to EV production and what they expect for 2026 in terms of both EV production as well as the market overall. Remember, they were down. EV sales, I should say, were up just 7% for the whole country in 2025. We'll see what happens as we see the end of those EV incentives. We'll see where it comes in for 2026.
Yeah, and obviously a lot of that, I think 7.8% is made up of Tesla. Bigger picture here for me, Phil, it was only a few weeks ago, Ford announced, $19.5 billion in charges for its EV plan. So what are we going to be getting when it comes to EVs from Ford and GM in 2026 and 27? What are they actually going to be producing?
well, it's going to be dramatically lower than what we've seen in the past couple of years. But they've both been very clear about this, David. They still plan to sell electric vehicles. Ford is pivoting away. Let's give it an example here. The F-150 Lightning, that's going away. It's the pure electric one. What they do plan to build in the future will be in an extended range electric vehicle, which, as you know, it has essentially a generator on board. You fuel that then provides power to the electric motors. So you get greater range there, but it's not pure electric. And for General Motors, it will still sell pure electric vehicles, but it's already made a decision on its Orion plant in Michigan to pivot away from EV production at that plant to internal combustion engine production. So essentially shifting more towards either internal combustion engine vehicle production or hybrid production.
Got it. All right. Thank you, Phil. Phil, the GM shares down 3%. We are just a few hours away from a key meeting with oil executives at the White House to discuss the developments in Venezuela. We'll bring you live to Washington for details on what to expect here. And do not forget, you can catch Squawk on the Street anytime, anywhere. Listen to and follow the Squawk on the Street podcast. We're back in just a moment.
Look at the productivity is going up. This is a sign of the Trump economy and the manufacturing in particular. But of course, the administration has shifted to saying, well, 2026, this is going to be the year. The implication that 2025 didn't end necessarily with the boom that they had hoped for, but we'll see. But right now, absolutely, it's the case that these remain verbal pledges, almost aspirational in many cases, as opposed to like hard fine print.
Before we let you go, Josh, the Supreme Court did not issue a ruling on Trump's IEEPA tariffs, its reciprocal tariffs. Was there any, I guess, betting that it would happen today or next week? I mean, we're talking about how the Supreme Court it can wait until the very end of its session to come out with this ruling.
Yeah, there was thought that it might come in December. So when the Supreme Court said today as its first day of rulings, there were, people thought, oh, this could be the first day that it could come. Now we go back to sort of waiting to see when they schedule the next rulings, and we will see. But it's not coming today. I will say that there was a call last night. Hassett talked about it earlier today between Trump economic officials talking about their plan B, and they said today, and they said before that they plan on acting if they lose the case. They think that they will win the case, but if they lose it, they talk about pivoting to other authorities. Today they talked about Section 301. They talked about Section 122 in the past. Tariffs are going to be a part of Trump policy.
All right, Josh, thank you so much. Josh Ringgrove.
Here's the problem. If the Supreme Court issues that the way Trump conducted the tariffs is inappropriate, then it's going to cause instability in the market because no one will know exactly what the tariffs will be in the short run. And so you're probably going to see VIX spike a little bit. Now, will it be as bad as April of last year? No. So I suspect that if the Supreme Court releases a negative ruling against Trump, then we're probably going to see a little bit of a downdraft on the market. But they have these other mechanisms. But these other mechanisms will be like, well, what exactly does that mean with the tariffs that have been negotiated with certain countries? What goods and services, or what goods that are being provided? What's the tariff rate? So there's going to be a lot of unknown. Now, in terms of the reimbursement, some of these companies are trying to get in line to get the reimbursement. But I thought that the economists were saying that the pass-through is going to the consumer. Well, if the pass-through is going to the consumer, shouldn't all of the tariff money go to the consumer and not to the companies? So think about this for a second. All right. The companies are saying they had to raise their prices. The economists are saying they had to raise their prices and have the consumer absorb it. Now, if the economists want to be truthful and the companies want to be truthful, it's about 1/3 to 2/3. Not 100%. But so 2/3 of the money should go to the end user, should be reimbursed if the government if the Supreme Court is saying that it was illegal. So the money shouldn't be going to the companies. So what's going to happen is that the consumer absorbed the cost, maybe 2/3, maybe 1/3. Some pontificate that it's 100%, which it's not. But let's just say it's 2/3. The consumer absorbed that. The company absorbed 1/3, or companies within the chain absorbed 1/3. So how much should the company be reimbursed? 1/3, and 2/3 to the end user, the customer, the consumer? Or will it be 100% to the company? So what happens is that the company ended up making money. They get their tariff of 100%. This is a potentiality of the way this is set up. The government gives the money back to these companies. So let's say there was $100 of tariffs for a particular good, and they give that $100 to that company. But the end user paid $66 of the tariff. Now, the end user isn't going to get the tariff money. So if the end user isn't getting tariff money, the reimbursement, and the company gets the $100, so they made money. They made $66 on top of their normal. So this is a windfall for corporations if this isn't divvied out fairly. And because of the complexity of this, it would be very hard to divvy it out fairly. So either all the money should go to the consumer, to the end user, or there needs to be an average where a certain percentage goes to the company and a certain percentage goes to the end user, to the customer. But the government's not going to do that. I'm willing to bet that these companies, they're going to get reimbursed. So they get money. They will make money on it now. They're not getting just reimbursed. They'll make money on the difference that they pass to the customer. Now, if they passed 100% of it to the customer and they get the reimbursement, the company gets the reimbursement of $100, then they've made $100 because they've already passed it through to the customer. So now you add in the potentiality of getting a reimbursement to the end user, the tariff money that Trump's been saying, oh, you're going to get a check. So the government is going to send a check to a company, and the government is going to send a check to the consumer. Now, is it going to be the full amount of the tariff or only a certain percentage of the tariff? If it's only a certain percentage of the tariff, that's more fair. But if the company is going to get fully reimbursed and the end user gets fully reimbursed, then what effectively has happened is that the government has used fiscal spending to help corporations and to help the consumer. And it's more wasteful spending. It's a fiasco. It's a total fiasco. These companies should not be reimbursed because a lot of these economists were saying it's almost 100% pass through, which is not. It's probably around 1/3 to 2/3.
The region wouldn't have that much of a shift to head back. I have not been down there. You have.
Oh, it's fairly close, and of course, as you know, it's similar reservoirs or same. I mean, you're talking about the same, I guess, geology, and I don't want to go too far here, given my lack of knowledge, Brian. But there's no doubt that it is close by. And remember, we can remember not that long ago when there were threats from Venezuela in terms of Guyana itself and taking control, so to speak, of their oil, which is going to approach, 1 million barrels a day at some point, right? Which would exceed that from Venezuela, which is so much bigger in terms of the country.
And Brazil's down 4 million barrels a day vis-a-vis Petrobras. One thing, but finally, that guys know we're going to head to the White House. Watch Iran. The protests that are there don't have a lot of information. Iranian oil is all the same company, NIOC, National Iranian Oil Company. if there is some kind of meaningful change in Iran, it's going to involve oil. That's 3.2 million barrels a day. Watch Iran. That may factor into some of these negotiations and discussions today as well.
Yeah, as we get closer and closer, Brian, to a six-handle on West Texas. Pretty interesting. Brian Sullivan in D.C. When we come back next hour, a Canvas interview, former Goldman CFO, now turned single-family home investor Stephen Scherr is with us. We'll talk about the president's plan to keep institutional investors from buying single-family when money movers
decide to put money to work. How quickly could they get Venezuelan oil back online?
Years, decades. I don't think there is the political will on the part of the energy industry to really bring those barrels back online. Exxon made a significant acquisition in Pioneer here in the U.S. Chevron spent a year plus battling for Hess in the courts to invest in Guyana. That's where they're earmarking their dollars. Could there be incremental capital spent in Venezuela? Sure there can. But to resurrect an industry that was at one point at 4 million barrels a day from roughly 1 million barrels, it'll take a great deal more than just the capital. Where do you send those barrels? The industry has changed since the 70s. The industry has changed just from 20 plus years ago. Now, we're talking about renewables. We're talking more about alternative fuels. We're talking about on-road vehicles being powered by different sources than your typical hydrogen-powered engines. So it is a very different framework, state of play today than it was, say, 10 years ago. But incrementally, you do need those barrels, and it would be great to have that competition for those barrels.
Vince, thanks so much. We really appreciate your expertise here. Vince Piazza, Senior Equity Research Analyst. He follows all the major oil and gas companies for Bloomberg Intelligence. And again, Energy Secretary Chris Wright will be on Bloomberg Television tonight, Balance of Power at 5 p.m. Wall Street time tonight. Maybe he'll have some clarifications and more guidance for the markets here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crested Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts.
Please go to my store, the-studio-reykjavik.com, and get the collagen. This will help to build muscle, help the density of your bones, help the health of your cartilage and your joints, improve your skin, your hair, and your nails. This is very high quality collagen. This is a month's supply. Take it every day. And I also have a great new product called Collagen. And you can stack it with the collagen or take it separately. You'll get synergistic benefits if you stack it together. But Collagen is a dropper. You take 2 droppers underneath your tongue and drink filtered water. Do this daily. And what this will do is help to remodel your joint that is injured. All right. What it does is that it helps to remodel it with collagen 2 and ACAN. ACAN helps with the cushioning of the joint. It also this will help to bring down the inflammation and reduce the erosion of the joint, and also help with the pain receptors. So what this will do is it'll reduce the pain, help to remodel, and bring down that inflammation. All right, take this if you have problems with your joint, either because of just getting older or because of a sports injury. Now, what I recommend is you slowly, very lightly, do some resistance training with that joint, that problem joint or joints. Take the collagen and then take the collagen to help remodel. Now, you'll get additional benefits, and because not just remodeling the joint is important and the cartilage, but you also want to improve the elasticity of your tendons and your ligaments. So you need to do some stretching. And you also want to improve the density of the bone around that joint. because usually if you've had chronic inflammation at the joint level, you've probably eroded some of the bone and started to develop osteoporosis. Or, I'm sorry, osteoarthritis. All right, and you're causing more pain in that area. So it's important to remodel the joint and also remodel the bone structure around the joint to reduce that osteoarthritis. Now, if you start having brittle bones and osteopenia or osteoporosis, you really need to start strengthening the bones. That's taking in calcium, taking in vitamin D3, and taking in vitamin K2. But it's really important that if you have a shoulder injury or a knee injury or just joint pain because of getting older, you can reduce this effect by taking the collagen, and that will help to remodel the joint, bring down the inflammation, reduce the pain. And then if you do this in a holistic way, like I've just mentioned, you'll be able to remodel the joint, the musculature, the tendons, the ligaments, and the bone density. Because chronic joint pain will lead to, there's a very high probability that it will lead to osteoarthritis. So please go to my store and get the collagen and stack it with the collagen. All right.
That is an example of, I think, why people are feeling really bullish, pushing back tariffs a year. Sort of the administration almost every day now rolling out something to help trying to juice and make the consumer feel better.
Yeah,
That's cool.
That's exactly what I was saying, though. Negative for margins and pricing. It could be. But that's kind of what I was saying. But basically, people are saying, yeah, we know the tax provisions are going to kick in. We're going to get an extra little bump in terms of refund season. That was already baked. But I do think that what I meant by the run and hot scenario has everybody believing it is for that reason. It's because you see them pulling every lever they can grab, and it's all this sort of, oh, look, it's demand-side stoking of the housing market.
It's a CEO running the
But it's a CEO who's trying to grab for the tools that are, and you know what else it is? It's the Treasury issuing on the short end, the way they criticize Yellen for doing forever, and it's every single move that was tried before. I mean, accelerated depreciation is corporate cash for clunkers, okay? That's my take on it. Often things they've already bought, already spent money on. Which is all fine. And it does get the economy moving. Right? I mean, you see whether you actually have leverage in those levers or not. I think more to the point, though, the market craves other things to play besides AI. There's AI fatigue. It seems a little bit zero-sum among the mega caps. You see a day like today where the wild, long shot energy plays are again flying, and it shows you, okay, we sold those in the first few days. All we cared about was memory. It's become a very whippy trade, that AI theme, and so everyone would love to just say, let's buy FedEx, let's buy United Rentals, let's buy Marriott, let's buy Sterilize. But home builders best week in almost a year. Exactly, and I think the question is, how much of a ceiling do you have on valuation above where they're already trading? I was looking at American Express the other day. American Express is 22 times earnings. It's a financial. It hasn't traded up there really since the global financial crisis. So I think you see that, step by step if you go through the market, that, yeah, it may be cheaper than Alphabet at this point, or it's cheaper than Microsoft, but it's not cheap relative to its own history.
Even though they're looking beyond the AI, I mean, what's propelling the utilities to the top of the market today, it's an AI trade. Vistra is up 13%, and then some of these other nuclear plays, Constellation, NRG, they're soaring on this meta.
I mean, I don't mean to say that it's over. Yeah. It's just that the market felt as if it was too narrow, too extended in one direction, and they want to try something else.
Yeah, hence the small cap stuff.
And they also want to just own risk. So it's not as if, equity exposures are already really high, and even if you're kind of just going to rotate around, it's not because you want to go to cash. You want to actually just find something else that's underexploited.
All right, Mike, thank you. And as always, Mike Santoli. For more on the market and the outlook for deal making in particular, let's bring in Citizens Commercial Bank Vice Chair Mark Lehman. Mark, from your position where you sit now at Citizens, how does the outlook shaping up? What does activity look like?
I Happy New Year. Maybe too late
Happy
to say
New Year.
that, but I'm going to anyway. I think 26 is starting off the way we expected with some announced deal activity. It will be a good year. I think the market will widen out in terms of kind of deals. We saw a lot of mega deals in 25. I think it'll be a widening year for more mid-sized companies in 26. And I also expect it to be a very productive year. There's a lot of pent-up demand. There's a lot of pent-up supply. And I think that will be occupied a lot of people's desks in the next 3 to 4 quarters.
What sectors are you watching when you talk about how optimistic you are on M&A?
I think tech will be very busy. I think we've seen a bunch in healthcare. Obviously, the resurgence of life sciences in the last half of last year, I think was somewhat unexpected, but we've seen a really good sector there. And I think we're going to continue to see, consumer. There's a lot of capital out there, and I think it's going to be a very, very large palette for the companies that want to sell. I think it's going to be a very good year for M&A.
Yeah, I mean, there is this question about good year for Wall Street. What about Main Street? I mean, you also have a pretty good lens there at Citizens on what's happening with the consumer. Are you as optimistic?
We are optimistic. Things are changing rapidly, as you said, and I think the White House focus on affordability is really important. Obviously, there's some tenets to that. It's housing, getting mortgage rates down, getting oil prices down, getting it more comfortable so the lower end consumer can feel more comfortable with how they spend their money. A lot of what's happening in the economy is benefiting the higher end, as we've all seen, and getting that a little bit wider is very, very important. So I think the consumer is healthy, but I think the White House laser vision on that is going to not change for the rest of the year and into obviously the midterms, which are very important now and only 10 months away.
Yeah, that's why I think, Mark, the New York Fed stuff yesterday was so alarming. The expectations of finding a job in 3 months if you lose one today, the expectation of missing a minimum debt payment in 3 months, cycle highs. I mean, do you see that kind of stuff? I mean, Michigan, I guess we kind of already discounted as maybe a not reliable model, but do you see that weighing on consumption?
Carl, it has to. I mean, you look at what the White House is interested in. They obviously want to get oil prices down. They want to get mortgage rates down. But when you get your power bill and you get your insurance bill, which everyone's going to get shortly, those are going up. And those are really hard to contain from policy right now. Those are longer cycle things that don't change overnight because of policy or because people want it to be lower. That's what I worry about for Main Street. I think the economy is humming along really, really well. And the forces that are making productivity go up, like AI and other things, are things that are going to happen for the next decade, frankly. And as we've said on this show many, many times to disbelievers, AI is the most powerful deflationary trend, and it's just beginning. There'll be fits and starts and companies who want to watch and obviously make a lot of money, and there'll be some people who won't make a lot of money if they invest at the top. But this trend is not going to slow down.
Right. I guess we're in that period, though, Mark, where it's clearly benefiting large companies, right, where revenue per employee is going up. At the smaller companies, it's the exact opposite. So we do need to see this bleed into ways in which small businesses can afford it, yeah?
Absolutely. And I think we would have said the same thing 25 years ago when the internet revolution began, which is it's really easy for big companies to standardize on that. And it's more expensive and more, oh my God, how am I going to even do it if you're in a small company? But that's coming. And obviously a lot of the technological innovation that's coming in the small business startups that are hitting those will benefit. But those are down the road, I think, for a lot of people. And there's also kind of a numbing effect to this AI revolution for some people who are like, I don't know if I can stomach it. I don't know if I can have the wherewithal to do it for the next 5 or 10 years, but it's going to happen. And I think, like you said, the big companies are seeing it every day. The profit per employee, the productivity gains that we're seeing, we're certainly seeing it here at Citizens, but we're talking to investors and we're talking to startups every day who are trying to implement that. And that's really exciting for us.
Okay, Mark, we'll leave it there on that optimistic note. Mark Lehman, good to see you. Citizens Commercial Bank Vice Chair.
Still to come this hour, one of the smaller companies.
Please go to my store, the-studio-reykjavik.com, and get the Good Night Formula. Good Night Formula will help you to get into 3 to 5 cycles of REM sleep and deep sleep so you consolidate memory, detoxify your central nervous system, and be well rested. By taking Good Night Formula regularly, you're going to slow down the aging process and improve your brain function. Resveratrol helps with youthful gene expression, soaks up free radicals, improves the health of your mitochondria. You'll have more energy, and it helps to get rid of cells that are in senescence. Resveratrol also helps the health of the basal layer, to improve your skin. This stacks really well with C60 to slow down the aging process and improve the health of your skin. Clarity Factor, very powerful neurostack. It gets rid of that brain fog, allows you to concentrate. And when you take this regularly, take it every day, drink it with filtered water, you will improve your dendritic connections. You'll be thinking faster and you'll have better memory. It's really important to improve your neural health. So please go to my store and get the Clarity Factor. It stacks really well with the resveratrol, C60, and the Goodnight formula. So a very powerful neural stack here is the Clarity Factor with the Goodnight formula. And for youthful gene expression, especially for your skin, for your overall cells, including your neurons, resveratrol. You want to soak up those free radicals and improve that mitochondrial health so you have more ATP in those neurons. So please go to my store, use discount 5, you get $5 off.
Back again. It's only 1 month, but it fell back again. So it's telling you that we're not seeing a massive increase in unemployment. And that's what the Fed was worried about, not so much the level as how fast it moved. And if it's not going in the upward direction, it's not moving very fast, and they can relax a little bit.
I'm looking at the average hourly earnings, 0.3% gain for the month of December, matching the analyst estimate there as well. What does that tell us about wage inflation?
We're still seeing wages outpace inflation. That's the important thing. At 3.8% on a year-over-year basis, inflation running at about 2.8 or 2.9, depending on which number you're using. And so that should make people feel better. And obviously, we've talked quite a bit about why people aren't feeling better, although today, so the University of Michigan numbers come in with Americans a little more cheerful about the way things are. It doesn't suggest that there is a wage inflation problem, which because we're under 4%, it's still a little high to be neutral in terms of inflation, but that's on the good side. If inflation's still coming down, but we're getting more money in our paychecks.
You know, we talked to Joanne Shu from the University of Michigan just moments ago, Mike, and I tried to take a glass half full approach like you did. Hey, it came in a little bit better than expected, and she said, no, we're still bouncing along below here. You want to see something with a 60 or a 70 kind of, you know, and so.
Yeah, no, it wasn't like go throw confetti.
Yeah.
But,
that's what I was trying to do.
Part of the problem with these sentiment surveys is you tend to get a recency bias. People are comparing how things are today to how they were a month ago or last summer or whatever. And you get people saying, well, you know, look at where we were. This is so much lower. It's just been that way for a long time. And the one that always gets me is consumer confidence is lower than it was.
I want to listen into CNBC about the court not issuing a tariff announcement.
I think that this is a complicated case, and I think the Supreme Court needs the time that it needs to get it right. We'd rather see it get done right.
What led you to take the stance you have?
Well, the tariffs were a significant threat to the future of our business. We have a lot of families counting on us, and so I just felt like we couldn't stand by idly. We had to defend ourselves.
Did your legal counsel suggest to you that you stood a good chance in court?
Oh, I firmly believe from the outset that this was unconstitutional and unlawful, and I went looking for counsel to represent us for that.
So what's happening is these companies are asking the government for a rebate on the tariffs. Yet we've been told by economists that the consumer was going to get 100% of the pass-through. The reality is it's around 1/3 to 2/3. So the companies are going to ask for a reimbursement of the tariff, not give it back to the consumer. The 1/3 or 2/3 pass-through, they'll keep it. And the consumer paid for the tariff. Think about that for a second. The ones that should be getting the rebate is the end consumer. Is it 100% pass-through? Then 100% of the rebate should be going to the consumer, not to the company. Now, if there was no pass-through, then it should go 100% to the company because they absorbed it. But the reality of the situation is that it's going to be some sort of, depending on the type of good, depending on the company, there's going to be some sort of split. Maybe a 1/3, 2/3 split, maybe a 50-50 split. But how are you going to manage that with so many products across the economy, with so many different companies? So what's going to happen is that you got a bunch of companies that are suing Trump's administration and asking for a tariff check. But they're not going to give it to the end user, to the ones that they increased the price to and the consumer actually bought. So it's a major windfall for the corporations. And this is what happens when you have the Supreme Court getting involved with the economy, because many lawyers are stupid, even the ones that are on the bench. And it doesn't matter if you're a Democrat or a Republican, or if you're a conservative judge or a liberal judge, it doesn't matter. Most lawyers are stupid. So this is going to be a windfall for the corporations. Meanwhile, the average citizen paid most of the tariff, 2/3. Are we going to get a 2/3 check? Maybe, maybe not. But let's just say that we do get the 2/3 check, and the corporations get 100% of the tariff check. Then that means that the government actually spent more money than actually brought in. So we have more debt because the Supreme Court got involved with economics.
Services its data, and that's what's going to come back. We are not likely to be a world center in handmade toys.
Finally, if these IEEPA tariffs are ruled illegal, would you expect rebates to filter through back to the consumer?
Well, we've tried to significantly moderate cost increases. We haven't announced a 26 price increase this year. We're trying to anticipate that those monies will come back and average our costs down. And I believe that since this is the most competitive market in the world, prices will sharpen right away because consumers in charge. So I believe that it will be passed back to the consumer.
No. So that's no. So what he's saying is basically he's not giving it back to the consumer. He's going to maybe lower the prices for future purchases. What happens if the consumer doesn't want to go back to your company? See, they're going to take it as a windfall. This is exactly what I'm talking about. This is he just said it. He just said it. You know, well, maybe we'll lower the prices. Maybe
and enforce it, and we believe they'll do that. So in the ordinary course, the money will come back to importers, and then we'll spend it to build our business.
No.
Rick, it is fascinating, and it must be incredible to me at least.
No. If I was the president of the United States, I would say, okay, all the companies, you get in line that have been tariffed based on this policy. If there's a negative ruling from the Supreme Court, it hasn't come yet, so we don't know what the ruling is. But let's just say it's negative against the Trump administration. Then the companies start to sign up, and they get into a database, okay? And then it's going to be, you drill down. How much do you pay in tariffs? And then you drill down into what were the products that you offered pre-tariff, what your price was, and post-tariff. And you compare. And based on that, you determine on how much they get back. And if they can't give you that information, they don't get it. But if they just do a simple government's not paying attention, they're going to get 100% of the tariff, even though they pass through to the consumer. And these companies just got a windfall. And the taxpayer is paying for the windfall for the corporation. Meanwhile, the way it was supposed to work is the tariffs come in, reduce our debt, or reduce our tax burden at this citizen level. No, the courts have to get involved, and all of a sudden, we actually spent more money than we get back. So I'm hoping that they are smart in the Trump administration, and they drill down and say, prove to us that you absorbed 100% of the tariff. If you didn't, if you can't prove it, you don't get 100% of the tariff. If you absorb 25%, fine, you get a 25% of the tariff back. And guess what? That's fair. That's fair. Now it gets even more complicated because of all these other mechanisms that the Trump administration can do to initiate the tariff. The question is are they even in line for a rebate or not? A reimbursement? Maybe, maybe not. Who knows? But this is the complication. You have a litigious society, and literally it is harming the citizen, the taxpayer.
They're higher after President Trump said on his social media platform he's directing the purchase of $200 billion in mortgage bonds. This is about affordability. S&P 500 up 36 points right now. That's up 0.5%, 69.58. And the Dow Jones Industrial Average up 218 points. The Nasdaq Composite Index up 160 points, and that's a rise right now of 0.7%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett Ball.
Now on Bloomberg Intelligence, Munis in Focus.
All right, the focus on Munis today is brought to you by Fan Mutual. Let America's strength to work in your portfolio of Fan insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with Fan Mutual. And there you go. John, you're going to stick around for this discussion here. We're going to talk a little Montclair, New Jersey. Erin Hudson, municipal bond reporter for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. Now, Montclair, New Jersey is a great town just west of New York City. Most people, or a lot of people that live there, kind of work in the city, work in the arts, entertainment industry. Great commuter town, great town in general. They got some problems with their finances. Erin, talk to us about what's going on in the municipal bond market for Montclair, New Jersey.
Yes, so Montclair's public schools have an $18 million deficit. And this is something that they learned about over the summer. It took everybody by surprise when the local administrators made this announcement. And basically since then, they have been trying to get a handle on the deficit. They've started cutting staff, so reducing teaching staff. And now they are asking taxpayers to increase taxes to make up the rest of the difference.
Of course.
So
and the taxpayers are always getting screwed.
Values have gone up, so your assessed value has gone up, so the tax increase could be substantial.
yes,
I'm
and
guessing.
definitely. So yes, Montclair, the average homeowner in Montclair is paying over $21,000 in property taxes already. And
By the way, parenthetically, New Jersey, for the rest of the country, has the highest property taxes in the nation.
yes, and within the state of New Jersey, Montclair is among the highest. And so these proposed increases that would help pay the school budget deficit would be about $1,500 for the average homeowner. So
yikes.
Yes.
Okay, so real money here. Would this be a permanent tax increase or kind of a one-time adjustment?
So there's two questions that would be on the ballot. One is for a permanent tax increase, and one is for a one-time increase. And so part of that is that what the school district is saying is that they are facing a structural deficit. So clearly mistakes have been, there's been issues. There's unbudgeted expenses so expenses are way higher than revenues, but they are saying that in addition to just solving this $18 million gap, they are going to need more money going forward. So this is a tough pill for residents to swallow, especially when they're seeing their home. The town is also in the middle of or about to go through a property tax reassessment. So taxes will be going up for a lot of people regardless.
And Montclair is an interesting town. I'm not sure if it's a city technically, but There's a lot of wealthy people there, average home over north of $1 million, but it's a very diverse population, all different income levels. So the average salary, the average median household income is about $167,000. So the numbers that for a lot of people, these taxes are going to be just onerous. My question is, where did the budget shortfall come from?
Yeah, that is really the question. What the district has told us so far is that there were unbudgeted expenses. They found unpaid bills. Who's running the district now are administrators who started their terms in July 1st. So these are new administrators who took control of the district and immediately announced that they saw a deficit, and that's what this district is grappling with now.
When you open your tax bill, it's just like it breaks it down, the county, the municipal, and then the school. Far and away, the school part of the tax is the biggest part of any homeowner.
Yeah, that's why New Jersey, I don't know.
And here's the problem.
Some of the best
the private schools are doing better than the public schools. Your kids, they're coming from the public schools, they can't read, they can't write, they can't do mathematics, they're stupid. But yet they'll keep on jacking up your taxes and feeding a system that is inept.
In terms of the Black population in Montclair has been declining over time. And that's something that is concerning residents, some of the township's council members also. This is on their radar too, that you know, people are getting priced out, and especially as these home prices rise, it's just becoming unaffordable.
I know my assessed value of my home, based of which you base the taxes on, has gone up dramatically. Right. I don't know what to, I'm at this point going to leave empty beer kegs on the front lawn and jack up an old car.
Right.
To try and bring down my value.
Just to bring it down a little bit. So the vote for residents to decide on how they want to go forward is not till March 10th. What is it like in Montclair right now? I would imagine there's a lot of emotions running high.
Yes, things are, and, they've actually been this way for quite a while, because this vote was actually supposed to happen in December, but then a legal challenge was brought against the vote. So the vote was canceled and then rescheduled. So I think, after the holiday break right now, parents are being asked to volunteer at their schools because there's been staff reductions. Leading up to the last vote in December, there were lawn signs, high school students were going door to door. So, it's still early. Only on January 5th did they confirm this election is going through in March. But, I would anticipate that residents are going to be mobilizing, residents and schools.
Close the school. Close it.
No, bonds can't be, well, not immediately. Yeah. They do plan on, if voters agree to have the taxes get raised, then the district's plan is they're going to issue a short-term type of municipal debt that is going to basically allow them to tax anticipation notes. So they're going to be able to get the money for the taxes that will come in, and then they'll repay that debt.
Okay. All right. Keep an eye on good story on the Bloomberg terminal there for our good friends in Montclair.
Public schools have failed. They should not be getting more tax revenue. Please go to my store, the-studio-reykjavik.com, and get the lignans. This will bring down inflammation, soak up free radicals, help with your immune system and your endocrine system. Turmeric will bring down pro-inflammatory cytokines and also soak up free radicals. That will help with your immune system, your cardiovascular system, and your brain function. And ashwagandha root will help to control your cortisol levels and your blood glucose levels. Helps your cardiovascular health, your immune system, and brain function. Why? Because if you bring down inflammation at the cerebral level, guess what? Your neurons are healthier. So get the ashwagandha root, the lignans, and the turmeric together. It's a very powerful stack to slow down the aging process and to help with your immune system and your cardiovascular system. And if you're 40 years of age or older, get the vitamin B complex. Vitamin B complex will help the health of your mitochondria. The first 4 B vitamins helps with the electron transport chain, so you're going to be able to build up the ATP that you need. You're going to have better cellular metabolism, so you don't get fat, all right? And Vitamin B complex has B12. That's going to help to protect your neurons. So you're not stupid. Please go to my store and get the great supplements that I offer. I'll tell you, just never ending when it comes to municipalities. They just keep on jacking up the taxes, jacking them up. And then you got corporations that are suing and want all the tax revenue back, all of it. Maybe we're going to cut down the prices in future purchases to our customers, which means basically they're not going to do it. Prices are sticky. They don't go down very easily.
I think Chains had a really nice year in 2025. But because of that, they have tougher comparisons to lap, right? And so for that reason, we think, and we think QSR stands to benefit more from tax reform, as well as like a 10%-ish decline in oil prices. So we don't expect a bad year out of casual dining. We think they'll continue to do pretty well. They're not gonna receive as much of a boost from Chili's, which had an unbelievable year in 2025. But we think casual dining can have a solid year here in 26. But it's the casual dining names and some of the fast casual names we cover, like Kava and Wingstop, that we think can have a really nice bounce here, especially in the first half of 2026.
Mike, we got some labor data today, some jobs data. Unemployment rate ticks down a little bit here. I think that's important for restaurant companies.
Yeah, labor has been tough for restaurants. We've seen a 4%-ish wage rate inflation in this industry, going back to before the pandemic.
Why do you want to go to a restaurant? They don't feed you good food typically. If you know how to cook, you'll be able to make a better meal and a healthier meal, and it'll be cheaper. Why do you need to go out to eat? Oh, you don't know how to cook. Oh. Amazing. People whine about that they can't afford stuff, but yet they'll go out to eat. Learn to cook. Jeez. The hell's wrong with
in 2026? What are you looking for?
Yeah. So, for us, we're looking at chains that we think can outperform, same-store sales estimates on the street, with some chains that we think, other analysts are just not bullish enough on. McDonald's is coming up against some really easy comparisons due to E. coli once they report the 4Q and the 1Q. Wingstop, Brinker, these are some of the names that we've written about.
Okay, Mike, thanks so much. Always appreciate checking in with you. Michael Hanlon, Senior Restaurant and Food Service Analyst for Bloomberg Intelligence, safely ensconced down in our Princeton office. S&P up 30, the Dow up 140, and the NASDAQ up 146. This is Bloomberg. Good morning.
You ever wonder why most Americans are fat and unhealthy? It's because they're eating stuff that is very bad for you at the restaurants, or eating processed foods on a regular basis, and it causes problems with your gut biome, and your metabolism starts to go haywire, and then all of a sudden, you start having health issues, and then your healthcare costs go up. Your kids are stupid, and you got to spend more money for taxes to supposedly to put more programs in your public school, and it doesn't work. The reality is that if you want to have a more productive society, you literally have to just eat better. And when you eat better, you have better food, and you take care of your health, you're going to have a more productive society. No. We gotta have to have fat culture and the sad diet that will lead to problems with the economy, that will lead to problems with their health, will lead to problems with military prowess. Yeah, but just go to McDonald's and eat some more. Or, just go to, Olive Garden and eat some more. You're never, the never-ending bowl of whatever. Pasta. I mean, it's crazy. The United States needs to get off of their fat ass. Please go to my store,
the-studio-reykjavik.com and get healthy. You know why? Because you'll be a more productive citizen. Get the gladiator barley. You know, you need to be a gladiator so we can fight the fucking Chinese. Gladiator barley is going to help you to build muscle. When you have more muscle, guess what? You're controlling A1C levels. Oh, guess what? The two most biggest diseases in the United States, diabetes and cardiovascular disease. Why? Most of it is self-induced. Now, go to my store, get the gladiator barley, do some resistance training. You don't have to look like Arnold Schwarzenegger, but you get healthy, build some muscle, control their A1C levels. Bring down inflammation, soak up free radicals, and detoxify your body. And guess what? Your immune system and your endocrine system gets better. Your body is healing. It even helps with brain function because by bringing down inflammation at the neuron level, you're maintaining those neural connections so you don't turn stupid. Get the gladiator barley and Myotrol. Myotrol has polyphenols, flavonoids, and lignans to help with the gene expression that you need to build muscle. When you get older, your gene expression changes. It's called methylation. And that epigenetic profile, because of age, leads to not being able to build muscle as easily. This will help to build muscle and to maintain it. It stacks well with gladiator barley. And when you do some resistance training on a regular basis, you eat properly, you stay away from processed foods, drink filtered water, learn new things, do balancing, stretching exercises, and a little bit of cardio. You want to do more resistance training. Make sure you strengthen your back muscles. And guess what? That is a holistic approach to slowing down the aging process. So you're not a fat American pig.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News for this Bloomberg Business Flash. Major averages higher right now to finish the week. The S&P 500 up 32 points. That's a rise of 0.5%. We're at 69.54 on the index. The Dow Jones Industrial Average up 189 points. NASDAQ 100 up 177 points, a rise of about 0.7%. In the yield space, the 2-year up close to 3 basis points right now, 351. 10's not doing much. That's at 416. Meta said to become one of the world's biggest corporate buyers of nuclear power. So they've struck a series of deals to buy electricity from existing plants and support new reactor projects. Among the agreements, one with Vistra, so that's the best performing stock in the S&P 500. It was up over 13%. You have 9 of the 11 major industry groups in the S&P 500 higher, and not surprisingly, utilities in the lead. That's where the independent power producers live. The National Economic Council Director, Kevin Hassett, says the Trump administration ready to use other avenues to quickly reimpose tariffs if the Supreme Court strikes down the president's global levies. Now, the court didn't issue a ruling today. The next day they can do that is Wednesday. and you have tariff-exposed stocks like Lululemon Athletica, they were lower. Lulu was down almost 4%. And we checked, let's do this. Did you know Jeep is cutting prices? One of the few car manufacturers cutting prices. A regular Sport S now starts at $42,495.
Oh, that's below average then.
Yeah, they cut it by $1,300 for the prior model year. Rare case there. Most manufacturers are charging more because, in part, because of the tariffs. The average new vehicle, $50,000.
Yes,
dude.
I know.
That ain't happening. We checked the markets. I'm trying to keep my car on the road for like forever.
Oh, here's the story. So I had a flat tire, so I take it to Joe's in Manasquan. You couldn't even get into the parking lot. It packed with cars. The guy, he says, my business has never been better than it is today.
Yeah.
Packed.
Take care of those old cars, folks. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. See you next week.
All right, see you next week. Have a great weekend.
Safe trip there, Paul.
Yep.
John Tucker with our Bloomberg Business Flash. We need to talk about what's happening in Venezuela because we started this week coming in trying to make sense of the forced departure of Nicolas Maduro, what this means for the Venezuelan oil industry. President Trump gave us some hints of basically telling everyone that now the U.S. is going to oversee the sale of Venezuelan oil indefinitely, and he has invited U.S. oil executives to the White House this afternoon to talk with him about these opportunities presented. What does this mean for the industry? What does this mean for investors? Let's bring in Dwight Anderson. Dwight is founder and CEO of Osprey Management, a long-short hedge fund investing in commodities and derivatives. So he's a perfect guy to ask. Dwight, welcome to Bloomberg Intelligence. Thank you so much for joining us. Can you tell us a little bit about what you've heard is happening on the ground now with Venezuela, with oil, and what you think will happen?
Sure. Thank you very much for having me today. So on the ground, well, first off, a lot of it is opaque and there is confusion in terms of the different aspects and conflicting, but we still have sanctions in place. We are working to try and eliminate a bunch of the illicit and illegal imports through sanctions. So in the short term, there's no improvement and even a little bit of a fall in the availability of Venezuelan crude. But they are trying to figure out what needs to be in place in terms of governance, in terms of rule of law, in terms of support, in order to get the investments in to start to turn the decline and fall of Venezuela's oil production around. And so that's what the meeting is going on in DC, and that's what the other conversations that are occurring both in oil and gas, but also for mining and minerals.
Dwight, I got a real problem with you, I think, today. You got your MBA from the University of North Carolina. That's a problem to this new grad. But then you compound the problem by wearing a Carolina blue sweater today. But I'll try to be a professional, get us through this. Dwight, realistically...
I'm actually just coming from North Carolina where I dropped my daughter off to start college early.
Fantastic.
Lucky for them.
Fantastic. They do an awesome job down there. Keenan Flagler. Dwight, realistically, you've been in this business a long time. You know a lot of the players here. It just seems like what we know at this point, it's going to be tough to really make a commitment for significant investments, whether it's in, I don't know, the oil business down there, the mining business. What are you hearing from your contacts?
So we're hearing interest, but caution and concern. You know, you're going to have to resolve the three different groups of debt holders and obligations and their claim to some of the economic rights if you're involved, so where the general debt, China, and very especially on the oil and gas side, the Repsols, Eni, and ConocoPhillips that are owed $20 to $30 billion. And all of them say, hey, we're willing to get involved if we're comfortable on governance, on safety, and that there's some sort of support, whether it's political risk insurance, for us to have long duration investments that we're not going to see a return on probably to the end of this decade or next. And so they're really looking to try and create an investment environment and support for the U.S. government that gives them comfort for things that won't pay off economically probably this decade.
So what will the big oil CEOs be listening for, or be not pushing for, but seeking when they meet with President Trump in the White House today?
So we've spoken to a few of the different companies, and so one of the aspects is the ability to actually keep the economic profits. If they do produce the oil and gas, how is that going to flow to them when there are other countries like China or companies like ConocoPhillips that are owed capital? So one is just purely what is the economic framework on what they're going to be able to get, and then secondly is really aspect of support from the U.S. government, similar to like OPEC I spoke about. That is there going to be long-term support to, if they make these investments and there is a change of control down there or a change of ownership or nationalization economic interest, that they'll be compensated and insured for that. They don't need subsidies, but they do need some sort of underlying long-term sort of support or guarantee that the property law and rights are going to be supported or insured.
So how are you and your colleagues, Dwight, kind of thinking about the investment opportunities here? Is it too early? Are you trying to mix maybe upping a bet on Chevron or something like that may have an inside track? Or are you just kind of sitting back and see how this plays out?
Well, the answer to this clearly is the shipping companies, especially those who have the smaller quick carriers Aframax like Scorpio or Frontline, are going to benefit as we're really taking more aggressive stances to eliminate the shadow fleet. So those have to flow back to the legal tankers. And almost definitely there's going to be greater flows to the U.S. on that sort of, and to and from, including naphtha from the United States to there. So their clear near-term beneficiary, okay, is as soon as we're comfortable that there is some sort of framework give support for the investment, the immediate beneficiaries are going to be much more the oil service companies and the refiners after the shipping companies. And what really isn't being paid attention to is a critical resource for the U.S. and critical metal for us is aluminum. And we don't have bauxite, the raw material for aluminum. You know, this was a country that was producing 5 million tons of bauxite that's down to 1 million and has an aluminum refinery. That doesn't have the economic complications and debts that oil and gas does. It's critical for us. And so whether it's essentially aluminum, whether it's a Talco, or whether it's Rio Tinto Glencore, that's probably the easiest and clearest aspect as soon as there's a framework on sort of governance and rule of law there to actually turn around and begin investing to the benefit of the U.S. strategic supply chain.
Really, really interesting stuff. Dwight, thank you so much for being so candid and for sharing your thoughts on this. Dwight Anderson is founder and CEO of Osprey Management, long-short hedge fund investing in commodities and derivatives, talking not just about the oil industry, but also what it means for hard minerals as well.
Yep, hard minerals, and there's lots of ways to play it. He mentioned the shipping angle as one of the ways to play it. That's a great point. I hadn't even thought about the shadow fleet, which on global trade is material. It's a material number, and to the extent some of that goes back to the other shipping lines, that could be a benefit for them. So
I think it's important to get this kind of perspective and contrast it with what we're likely to hear from the White House at 2:30 p.m. when President Trump meets with these oil executives, who he may very well just push towards making a commitment.
Yeah, and that would work for the president, and maybe for some of these companies over the long term, that might work as well. So take a look at these markets here. S&P up 40 points, the Dow up 250 points. Hopefully it's about 0.5%.
All right, the S&P 500 is at 6,964. and oil is trading at about 59.66 right now. Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. This has 68 nutrients that will target multiple systems. It will help with your brain function, help with your cardiovascular health, help to control your A1C levels, help to boost up your energy levels and rev up your metabolism. Now, when you take this regularly, you're going to slow down the aging process and you're going to get healthy. You're going to also notice that your endocrine system and your immune system is improving. You will start to feel the effects of this within 72 hours. You're going to get a steady burn of energy, and you're going to have more vitality. You're going to be more active. And when you take this every day, this is a month supply, you're going to start noticing that you're aging slower. Your body's healing. Now, this is part of the core protocol that I have, and that core protocol is the following. Multivitamin and probiotic is the foundation. The first pillar, max 35, max 14 or cleanse to boost up your immune system. The second pillar, C60, very strong antioxidant, soaks up free radicals. The third pillar, turmeric, ashwagandha, and lignans to bring down inflammation that will help your immune system and your cardiovascular system. And Boomer Boost to rev up your energy levels and your metabolism. Please go to my store, get the Boomer Boost, and you're going to slow down the aging process. Now, you can just take the Boomer Boost by itself. You can stack it with the Gladiator barley or the heirloom barley. That has a synergistic effect to slowing down the aging process and getting healthy. Or you can stack it with the protocol, the core protocol that I just mentioned. Now, let's talk about the C60. C60, you can get in 2 ounce, a 4 ounce, or an 8 ounce configuration. You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. All right? It has to be in an oil for proper absorption. Take it on an empty stomach for best absorption, especially in the morning. Take a teaspoon a day every day. When you do that, you're soaking up free radicals. C60 is 1,000 times more potent than a molecule of vitamin C. One molecule of C60, 1,000 times more potent than vitamin C. And what this will do is help with your basal layer to improve your skin health. This stacks really well with resveratrol, especially for the skin. Now, C60 for your other cells, it's going to soak up those free radicals, bring down inflammation, help the health of the mitochondria. You're going to have more energy. The cells will perform better. So your tissues will perform better. And then your organ systems will perform better. Your immune system will be better. Your endocrine system will be better. And at the neuron level, the stress of the neuron will go down. The free radicals will go down. The health of the mitochondria will go up. You'll have more ATP. You'll have more neurotransmitters. And over time, you're going to have more dendritic connections. And so you're going to think faster. You're going to have better memory. You literally are going to age slower when you take this. Now, you will start feeling the effects of this within 2 months. And what you'll start to notice is your energy levels are better, your immune system is better, your endocrine system is better. And then over time, your body's healing and it's improving over time, all right? In 1 year, doing a before and after, you will look younger in a year by taking a teaspoon of this every day, all right? And the reason why is you're bringing down inflammation, you're bringing down free radicals. Now, if you stack this in my anti-aging protocol, you're going to supercharge this and you're going to be a lot healthier. Now, it's a holistic approach. If you just think you're going to just take a multivitamin, or you think you're just going to take a supplement and everything's going to be kosher or everything's going to be great, no, it doesn't work like that. If you stack supplements the way I've been telling you to, you get the max benefit. And it's about a holistic approach. Proper diet, proper exercise, all 4 modalities. That's cardio, resistance training, balancing, and stretching. The reason why balancing and stretching is so important is you need to activate that cerebellum. When you learn new things, you're activating your brain, especially if you're learning things that are dealing with movement, like piano, or learning an instrument, or learning how to build something, cooking. There's added benefits of moving your hands and thinking, especially if there's a process, a series of steps, model building, gardening, all right? If you are moving around all the time, you're going to be more accurate. You ever look at someone that is like, in terms of health, someone that's like working on a farm, all right? People that work on farms, they have more musculature, they have more bone density, right? Actually, I found that people that came from a rural area that worked on a farm were the best mechanical engineers in academia. But, you know, the point that I'm making is that by doing, there's added benefits that you get. There's positive externalities. So learning new things, being active, having some spirituality or some sort of mindfulness to bring down the stress, bring down the sympathetic nervous system, and bring up your parasympathetic nervous system. And when you do that, your cortisol levels start to go down, the stress hormones start to go down, and your body is healing. So if you apply this holistic approach, proper diet and exercise, proper supplementation, proper sleep, you're going to slow down the aging process, right? It works. But you have to be diligent. Now, If you can't afford everything that I offer, I understand. That's the reason why I keep on saying use discount 5 to save some money. And if you buy $100 or more, you get a free gift. All right. I want you to get healthy. But some people can't afford everything. I totally get it. This is the reason why that if you listen to me very carefully through this broadcast, I tell you how to stack them to get the max benefit for your dollars. So please go to my store, the-studio-reykjavik.com, and get the C60. Now there's a tech bro out there named Brian Johnson. He's a billionaire. He spends $2 million a year trying to slow down the aging process. I'm pretty sure that and I'm older than him, I'm pretty sure that my epigenetics profile is much younger than his. All right? The point that I'm making here is that you don't need to be a tech bro. You don't need to be a multi-billionaire to be able to help to slow down the aging process. It's a really simple, some simple ideas. Holistic approach, bring down that inflammation, soak up those free radicals, stay active. When you do that, you're slowing down the aging process. And so when you get older, when you're in your geriatric years, you'll have better bone density. You'll have better cardiovascular health. You won't be dependent on pharmacopoeia. You won't have all of the side effects of being on a statin or metformin or a beta blocker or blah, blah, blah. And your healthcare costs will go down. Your individual healthcare costs will go down if you follow my lead. Now, if the whole society did this, we wouldn't have the health crisis that we have in the United States. Healthcare costs would radically go down. What are some of the big problems that we have in terms of our economy? Healthcare costs are too high. Too much reliance on Medicare and Medicaid. Well, if you're healthier, then those costs are going to go down if the society in general is healthier. But if you keep on eating the garbage, if you keep on going to McDonald's, if you keep on eating crap, even if it's at a, quote, nice restaurant, most nice restaurants have too much sodium and too much oil. Don't be surprised that your liver starts to give out. Your kidneys start to give out. You start having plaque formation. You ever see someone that actually is having a heart attack? All right? And you can see in their eyes that they're so afraid of dying. Yet, in most cases, it's because it's self-induced. Now, some people, they get scared and they start getting healthy after if they survive their heart attack. All right? But a lot of them, at the beginning, they're going to say, well, I'm going to lose weight and I'm going to get healthy. And then about 3 months later, they're back to their same old, same old. You don't want to be that. I'm telling you. You want to be a person that actually has a heart attack and they're like seeing their life go by, flashes in front of them, even though that they're a fat ass and they didn't move around and they didn't take care of themselves. They spent more time watching Netflix than actually putting and investing into themselves. So please go to my store, get the supplements, use discount 5, you get $5 off, get healthy. Or don't be surprised that you have a problem when you get older. Thank you for listening. That's the end of my broadcast. Please go to my store, the-studio-reykjavik.com. Now, it does sound like I'm a little rough around the edges and telling you how to get healthy, but the thing is it works. The protocol that I have, that I use every day, works. And it's affordable. And it's better than tech bro Brian Johnson that spends $2 million trying to, trying to stay young and he's afraid to die. Thank you for listening. Have a nice day.